Morning all, how are we doing? Happy Monday. Anybody have any money in Silicon Valley Bank? Unlucky. If you had money in Silicon Valley Bank, you wouldn't be in here. But yeah, big moves this morning. Very difficult to know what's going to happen today. There's all sorts of weird and wonderful things flying around online this morning from Goldman and from various institutions and the Fed and everything. So we will see what happens. But at the moment, we are just about to hit 200% ADR on Aussie dollar yen. As you can see, as I was looking at this, the ADR dashboard is lit up like a Christmas tree, and we're not even started London yet. So it'll be an interesting one this morning. Morning, Michael. Morning, Diamond, John, Johannes, Big Zero, Big Papa. Oh, you got some competition, Big Papa. There's another big in here. Derp. Derp. Sounds like something out of Hot Fuzz. Yarp. Stevie, Philip, Bartek, Ratib, Alan, Whipping Post, HSBC have taken over SVB UK. Yeah. So basically, with just to clarify what's going on with this SVB situation, there's a holding company that holds, obviously that's what holding companies do. They hold multiple companies within them, sort of like an umbrella corporation. Not like Resident Evil, but like a big business that owns lots of small businesses. And the subsidiary business is basically of SVB, and the UK's one. So the Fed have basically bailed out Silicon Valley Bank US. Anything else related to Silicon Valley Bank in other countries is not being bailed out by the Fed. So HSBC have taken over the UK arm of it, but there's only 3% of its operations in the UK. So it's not massive, but it does have an impact. When these banks get stuck, money gets stuck. When money gets stuck, economies get hit. Businesses can't transact. There's all sorts of knock-on effects. So the markets this morning, or Aussie dollar New Zealand ADR as well, markets this morning will be unpredictable, to say the least. So just be careful out there today. Obviously, there's lots of money-making opportunities, but obviously there's also lots of no idea what the hell's going to happen sort of opportunities. So we will see. Morning, G positive. Morning, Virginia. Don't remain a tadpole. Kibria. Morning, Welkey, Simon. Thanks for the US dollar CAD. Held it over the weekend, and it gave a recovery. Cool. Good morning, Celcio. Right, so just kicking off with the news. Obviously, daylight savings time has changed in the US and Canada. So if you are in any area over there and you're using the opening range breakout strategy and EA, you need to change the times. Yeah, so in the EA settings, obviously, you'll have your start times. These will need to be adjusted because obviously it's now is different. And then obviously in a couple of weeks' time, we will switch as well in the Europe area, and it will all go back to normal. So just so you know, if you're here this afternoon as well, I'm starting at 1:30 this afternoon, not 2:30, because everything's shifted forward, which is lovely for me because I get to start an hour early and leave an hour early, which is lovely. So yeah, 1:30 this afternoon for the live room, UK time, not 2:30. Remember, if you're here at 2:30, you would have missed everything, including the open, obviously. 10:20 last night, there was a Fed announcement. We'll have a look at the news in a minute. We got 3 minutes to the open. So quickly running down this week's news, we got there's no news today at all, completely flat news day. Not that I think that's going to make any difference. Obviously, as you can see by the ADRs, it doesn't matter. Everything's moving like a crazy thing, regardless of news today. So tomorrow we've got the UK claimant counts. Doesn't tend to do a massive amount. Can be impactful though. It's one of those hit and miss ones. So we'll see what happens with that tomorrow morning. The main thing tomorrow is the CPIs. So it's the inflation figures for the US tomorrow afternoon, an hour ahead of the New York Open. So that is going to be a big one. That's going to be that will give an impact on what the Fed's going to do with its interest rates moving forward. We've got the budget for the UK on Wednesday. the budget's a funny one. It doesn't really tend to impact economically. It doesn't tend to impact a huge amount because it's really putting taxes up, down, and all this sort of thing in government spending and stuff like that. So with regard to the FX market, it doesn't tend to do an awful lot. They do, however, use it sometimes for moving the market erratically. So obviously whipsaws, spikes, and trying to entice people into positions. So we might get some movement off of that. We usually do get some whipping, but just be aware of that. PPIs and retail sales then on Wednesday. And then we've got GDP for the New Zealand dollar just before market close. Then we've got the unemployment figures for the Aussie. We've got the rates for Europe for the euro on Thursday. So that's another big one. Then the ECB press conference. And then we've got University of Michigan on Friday. So Friday's not much. So everything's focused around Tuesday to Thursday this week. However, obviously what's happening with SNB and what happened on Friday is going to have a big impact on everything this week. Potentially. So we'll try and pick that apart. But the Fed basically have said we are going up by 0.5%, 1/4% this month with our interest rates. Goldman Sachs have come out and said they don't reckon the Fed are going to increase interest rates because of this. But one bank failing is not the start of a collapse necessarily. Yeah, we haven't had a bank fail since 2008, obviously since the financial crash. So not a big one. So I don't think this is the start of a domino effect. If it was the start of a domino effect, obviously, so be it. But the problem with SVB is they put all their investments in one place. Yeah. So, when we talk about exposure, where's my pen? DAX is about to open. There we go. Market's open on the DAX. Got the spread on that. God, Fiverr's terrible spread. I'm playing a gap fill short, by the way, for those that aren't in the Telegram group. I posted this in the Telegram group this morning. Going for a quick DAX gap fill. See if we can get this done. Basically, stop above the high. Literally, just see if we can get it done this session. If not, we don't. That's fine. Whatever. But I'm going for a DAX gap fill. So we talk about exposure and the importance, in the bootcamp, I'm always talking about the importance of exposure and not overexposing yourself. Because if you overexpose yourself, for example, if the CAD flies now, I am overexposed on the CAD. I'm going to lose a lot more money than normal and possibly blow my account. It's exactly what SVB did. They put 50+% of their investments, of their client investments, into the housing market, into midterm mortgages, which were slightly higher risk. And they were basically betting on the fact that the Fed would not continue to increase interest rates. What the Fed has done is continuously increased interest rates. And it's got to the point where basically another interest rate increase and they would completely go pop. So they invested in a product that had a negative return if interest rates rose. Yeah. Mortgages go up. Yeah. When you get interest rate rises. So that's why they failed, because they had 50% of their exposure sitting in one instrument. That one instrument failed. Yeah. It's like going short on the CAD and the CAD flying 200 ADR today. I'm in trouble. Yeah. That's basically what they do. Obviously, they don't use a stop loss on their investments. So, but that's basically what's happened. And obviously that impacts an awful lot of other things as well. So there's a knock-on effect when these sorts of things happen. So we will see what happens today, but there's an awful lot of repositioning going on with the yen and with the Swiss franc, which we saw last week. And it'd be interesting to see if that continues today. So this morning, it seems as though the market has gone, oh, okay, that's fine. I'm a little bit happier now, because what we're seeing is a lot of money flowing out of the yen. So as you can see, all the yen pairs are pushing up, which means that there's weakness in the yen. So they're pulling money out of the yen. So not thinking it's actually quite as bad as it was. We still haven't got a pre-market 15 opening range break yet, look. Here we go. We're going short now, I think. Just thinking about it. There we go, short DAX. So yeah, all the ends are going up at the moment. So your choice whether you want to try and mean revert these, but not sure this is particularly impacted. If you look at the gaps that we've had on all of these, what they've really done is filled the gap with half of that. So a lot of these aren't actually ADRs if you think about the gap fill just being done and then the move, but we'll see. But anyway, ADR dashboard, Christmas tree this morning. Morning, Astro. So there's your news of what we got coming up this week. So nothing today. Today is literally going to be unwinding SNB risk from Friday. And tomorrow is when we start getting the moves with the CPI figures. Buyer scorecard was updated over the weekend with the latest COT figures. So we had updated COT from 21st. Yeah, 21st of February. So the site's updated with the latest COT report from the 21st of Feb. Not a massive amount of difference. The interesting thing for me was that they are slightly scaling out of their longs on the US dollar. Not much, but we were 68. We dropped down to 65. Everything else is pretty much the same. They are long New Zealand dollar. They are long euro. They are short the pound. They are short the Swissy, short the CAD, short the Aussie, and long the US. And they are short the yen. So that's all been updated. Market's really offside on everything at the minute. Huge. Hey, look, big news. Aussie dollar Swiss. We're now only 98% long instead of 99% long. Crazy. Okay, DAX, we were out the lows. There's your 5-minute opening range. So you're in 5-minute opening range breakout as well. Just beware of that. This is where the gap fill is. So if we do flush down to that gap fill fast straight away today, look for a bounce down there. They'll probably buy up the gap. If we get there, obviously. Which it looks like we are certainly on our way to do. Oops. Yemen, morning. If there is a gap in the market, it should be filled. Even in Bitcoin, I have no idea about Bitcoin. I don't trade Bitcoin. But yeah, in theory, yes. But I mean, it's the gap fills basically. So the statistics on gap fills for indices, I can't say for anything else, but for indices, 48% of gaps fill same day, which means 52% of gaps do not fill same day. Yeah. It's a statistic. Everything in trading is a statistic. Yeah. So the gap fill on Friday filled same day. You'll have others that will fill 3 days later. You'll have others that will get orphaned because there's been something dramatic happen in the market, which has caused a multi-day, multi-week run. So, are you trading change of character? I have no idea what you're talking about, Rishab. Are you trading change of character? Don't know what that means. Right. So we've got lots of ADRs to look at. So financial juice. I normally go through the news, the weekend news, on a Monday morning. The weekend news this weekend is full of contradiction. So basically, everything in here is potentially this might happen, potentially that might happen, then someone else saying potentially the opposite. So I don't think we can really read a lot into this. The Fed, because of what's happened over the weekend, may decide not to increase interest rates. However, this is one bank with a very bad risk exposure. When you look at all the other banks, their risk exposure is not as risky. Yeah, they haven't got 50% of their investments in a very high risk anti-inflation based product. So the UK is not doing that. The UK banks are not doing that. The rest of the banks, as far as I'm aware, as far as what's been reported, are not doing that. So this is a one-off, you stupid bank, don't do it again type scenario. So I don't think that's going to affect the Fed's decision, but it's the Fed. They change their mind when the wind blows. So you got Biden coming out this morning talking about the recovery, so that might have an impact this morning. We might get some movement when he starts talking, but this is what I was talking about. Goldman, basically, they don't see the Fed raising interest rates at its March meeting, March 22nd. So a lot can happen between that announcement this morning and the 22nd. That's 10 days away. Yeah. The Fed can make an awful lot of decisions in 10 days. So I'm not convinced that the Fed will not go for 0.25%, but we don't know. So that's really, to sum up all of this read over the weekend, it's basically uncertainty. So we will see, but it's certainly a big thing. Banks don't go bust very often. So it is a big thing. Guys, we've got 77 people in here and we've got 11 people like the stream so far. Can we remember to hit that thumbs up button and get some more people in? COCH is an ICT lingo. Is it? I don't know. Nothing to do with ICT. Don't trade ICT. I mean, break of structure, highs and lows for a universal. Oh, yeah, market structure, yeah. Funny enough, Rishab, you're in the Market Structure Traders stream. My website is called The Market Structure Trader. So yeah, funnily enough, I do trade breaks of structure, but that's nothing to do with ICT. It's market structure. It's been around for 200 years. I don't trade ICT stuff. I trade market structure. But my lingo for break of structure or market structure shift is market structure shift. When something goes up and comes back down again, that's a break of structure or a market structure shift. Yeah. That's not anybody's lingo. That's just what happens in the market. You're going to have to decipher stuff if you're using other people's terminology for the same thing. If you say supply and demand, I know what you mean, because I know you're talking about support and resistance. Yeah. Have you seen the views for Friday's show? Yes, I had 2,000 on Friday. It was pretty big, wasn't it? 1,500. Yeah, well, there was something like that. I had 2,000 one day last week on a New York one. A lot. I don't know what's happening. Word's getting out. It is this British bloke. He makes money out of not using a stop loss. I don't know who that was. I'm just making it up. Okay, DAX is on its way. We're just coming down to a potential support area. There's no real propulsion moves in here to look at. So I'm literally going for the gap. Nothing more, nothing less. Is that the stop loss? No, that's the stop loss. The other. 6,300. I'm just going to adjust stops on this. Just locking in profit above the propulsion gap. Again, if you're an ICT person, you probably call that an FVG, but it's actually a wide range bar. just so we get our terminology right. That's a propulsion candle. That is a gap caused by a propulsion candle. I call it a propulsion gap. It was invented by a guy in the 80s, and he called it a wide range bar. But if you followed ICT's course, who teaches the same thing in another different way, he calls it a fair value gap. It's all the same stuff. Is Financial Juice any good? Yeah, it's brilliant if you want to know what's going on in the news. Yeah, it's very good. I live on Financial Juice. Everything that happens in the market. Yeah, Financial Juice is no good for predicting anything, but when you see something go like, you're like, what the hell caused that? You go to Financial Juice and it tells you. That's what it's used for, basically. Is this something I need to pay attention to, or is this a whipsaw? If it's a rumor, it's a spike, you buy it back. If it's something that's changed, i.e. there's been a missile strike somewhere, or then yeah, you need to pay attention to it. But it just tells you why the market's reacted in a certain way, basically. So you need to be on it. Serge, morning. It seems like ICT has cornered the market with his terminology, but no one makes money with it. No, it's a course. All he does is he sells a course, doesn't he? He's another course seller. So you know, everybody's selling courses. Everybody teaches. You know what they say about people who can't? They teach. People who can do. People who can't teach. That's what they do. Anyway, let's go on for some analysis. I'm not saying you can't. I'm just saying he doesn't do it live. Aussie dollar Swiss. So I'm just going to run through these ADRs to start off with this morning. So whenever I see ADR hits this early in the morning, i.e. before the London Open, I'm very cautious with them, purely because it means that there's something happened in Asia that has caused the market to go crazy. And if there's no news for Asia, you know it's something else. And this is obviously a sharp move off the back of the SVB. So there's a lot of repositioning going on at the moment. Yeah, everybody's moving stuff around, moving money around. Not sure which way anything's going. So yeah, I'll get on to pound US dollar. So basically, it's difficult to tell whether or not these are good mean reversion opportunities. So what I would say is watch the bias scorecard. Anything you see setting up that is ready for a mean reversion in line with bias scorecard, probably worth taking. Yeah. Or have a look at the sentiment as well. Anything that's lining up counter sentiment, probably worth taking. Yeah. So looking at Aussie dollar Swiss. Aussie dollar Swiss is 90 to 8% of the market is long, so we want to be taking shorts. This thing is an ADR hit to the upside with a reversal alert. There's nice M pattern there. Yeah. A market structure shift to the downside. Beautiful big target in Asia. You've got these propulsion gaps as well. This is really the only one I would pay attention to, but all that one, obviously. But yeah, so nice potential there. Obviously, the market basically, everybody is still longing everything against the Swiss franc. We've just had a shift in structure. Sellers have started to kick in this morning. So if you want to get into that one, potentially you can take entries there or there. You know, if you're not already in on the reversal alert with the EA, that's a nice looking short. Aussie dollar yen. Right, all these yens, I'm going to whiz through all the yens because all the yens are extended. So the yen is a safe haven for when we have risky scenarios in place. The Swiss franc and the yen is typically where we see money flowing into when there's times of trouble. So these ADRs we're seeing, the vast majority of them this morning are money flowing out of the Swissy and out of the yen. On Friday, we saw it all flowing in. Yeah, so what we're seeing is a V-shaped recovery. If you look at a higher time frame, what we're seeing is a V-shaped recovery on Friday's move. So the market is just basically undoing Friday's move. Yeah. Yeah. Aussie dollar yen is coming down like a house of cards. What the market what happened on Friday is now being corrected. Yeah. So this SVB, this is what I'm saying. Goldman coming out and saying that they don't see the Fed increasing interest rates, I think is a little bit too soon to be saying that. The market's gone, oh my God, panic, panic, stick it all in the yen and the Swiss. Now they're going, oh, it's all a bailout and it's only one bank and they were overexposed. That's not a problem, is it? Everybody back to normal. So we're getting back to normal where we were on Friday before this all started kicking off. So potential continuations. However, obviously this is a break of structure down here. So we could be coming back up into the propulsion gap that we've orphaned up there. I don't know. But everything yen is very difficult to predict at the moment because we just don't know what is going on with the yen. We're waiting to see if they're going to change their interest rates, and they could do that at any moment and literally just come out of the blue with it as well. So the yens are very, very mixed pictures at the moment. They're all ADR hits today. I like them all short. I like everything short against the yen, i.e. yen strength. But we've got all these propulsion gaps orphaned. This one's just getting filled here from Friday. So there is potential to come back up and do these. But look at, we've also got these areas to the downside to come and get. So we're in a really difficult situation with the yen. All I would say is the bias is on the ends from the bias scorecard perspective. Most of it is longs because of the yen interest rates. Everything has got a potential plus bias against the interest rates. So everything looks like a long until the Bank of Japan intervene, which they do regularly. And then obviously everything comes down like a house of cards. So I would be more inclined to be shorting things, but it can go either way. So like with everything, you've got an ADR hit, you short it. If that short doesn't work, you scale in. If that scaling doesn't work, you've got a propulsion gap. Yeah. So you get in roughly half an ADR to an ADR apart. That would be the ideal position. So 1, 2, 3, and then you get out when they profit take that move. By the time they get up there, we'll be extended on the RSI on the hourly, ready for a profit take. Yeah. So it'd be like that sort of situation. ADR hit, no, that's not right. Getting at resistance, no, getting up there, bang, out. So it's the same scenario. The yens are all moving very, very nicely at the moment. So it doesn't really matter which way you get into these. Obviously, everything at the moment, New Zealand and Aussie wise, looks like it wants to be a sell. However, when you look at COT and the COT positioning, Aussie dollar, they are short. New Zealand dollar, they are long. Yeah. So it's all very, very mixed at the moment. Everything is very, very mixed. It's very difficult to get any bias on anything. So at the moment, I'm trying to stick as much as I can personally with what I see here. The yens I'm not really particularly interested in. On my Fiverr account, I am taking some yen. I'm not in any at the moment, but I will be taking some yen on my Fiverr account. Yeah, try and stay in line with the bias scorecard, really. And that will keep you in line with COT. It will keep you in line against retail sentiment with the fundamentals. You can't really go much wrong if you do that. So but yeah, so all those yens are very, very tricky. So we'll filter out the Swissies and we'll filter out the yens because these are just moves based on what happened last week. So if you look at them all, continuations really, but scaling as normal. We'll have a look at all the others. CAD yen, we've got Euro yen, pound yen, New Zealand yen, US yen. So there's a few others here, isn't there, to look at? New Zealand Swiss. Let me just catch up on the chat. Big Papa already short on Aussie dollar Swiss. Cool. Yeah. Yeah. I mean, that's the only thing I'd say about that is if you look at that in the 4 hour, that's a big old drop with no profit take. We had one accumulation drop. Yeah. This, I think, is a profit take move. So I would be looking on this one for some kind of pullback up into here or here. This accumulation is where I would say your most likely resistance is going to be. So if you're already short on this, look at this propulsion gap for a second entry, and then you're likely to get a bounce there. You may want to get one there as well. But yeah, I don't hold up too much hope for the Aussie at the minute. So it's just this is the Swiss franc, you know. Look, I mean, if you see when this move started on the Swissy, this power up on the Swissy that we had happened way before the SVB thing. Yeah, people were starting to put money into the Swiss franc before that came out, way before that came out. So they knew something, or it was just a coincidence, but it all happened very fast, very hard. Contrarian view on sentiment index. Yeah, so basically the whole purpose of the commitment of traders report on the website is, sorry, not the commitment of traders, the retail sentiment is you want to be trading against retail. So there's a combined sentiment page, which is what I concentrate on most, where you can look at what is aligned with COT as well. So anything that's a +6 or a +5 and -6, -5, you've got the commitment of traders, so the futures market in line, yeah, with the opposite of retail, yeah. So what we want to do is we want to stay in line with COT, stay in line with the expected market movements from the futures perspective. These are the guys that know where the market's going and have control of the market, so we want to stay in line with them. If retail are going the wrong way, we want to go that way. So when you've got a retailer wrong most of the time, basically, so what we do is we trade against them. So you basically got a +6 on US dollar CAD. You want to be buying US dollar CAD and you want to be buying New Zealand dollar CAD. Yeah. So you buy the dips. Basically. So always go against retail. Morning, Proster. Any tips? Any tips? What do you think this is? A horse racing channel? Yeah. Lucky Jim in the 3:30 at Cheltenham. Today's my Forex funds challenge for phase 1. First time trying to get funded. Any tips? Right, keep your exposure. I don't know. I don't know. That's a big question. Morning, Freeman. Stay in line with this. Only trade in line with that. Take reversal alerts. Stick to the hourly and the 4-hourly time frame. You'll be all right. Or scalp using the opening range breakout EA. You're undoing, aren't you? Do I want to bank you? I'm going to lock this in just because I want to get something in the bank today. So I'm pretty sure we're going to test this propulsion gap. We're either going to test this propulsion gap before we test the low, the gap, or we're going to test the gap before we test the propulsion gap. Either way, what I don't want is, just in case they do something big as a pullback, I just want to get something in the bank over here. So that's just under 1% there. So I'm going to take a risk on this that, when I keep saying, if you move your stops down, you're going to get stopped out. I probably will. So that high there, basically, I'll allow them a double top on it before they come back and test that. Otherwise, I'm getting out. And then I'll probably get back in again if that happens. But hopefully they'll just dump straight down to this gap fill. But I'm just keeping an eye on it, basically. I really wish that hadn't have happened on Thursday. Be pretty much over the line on this one, wouldn't I? Right. So the ADRs, just going back to the ADRs. Aussie dollar, New Zealand dollar is a hit. That's hit to the upside. I think that's already played out this morning. Yeah, just got the reverse alert on that. So 100 ADR, you've just had the reverse alert on that. Lovely target there for the downside. Aussie, New Zealand, obviously, as I've just shown you on the sentiment. Yeah, they are short the Aussie, they are long the New Zealand dollar. So you want to be shorting Aussie, New Zealand. And Aussie, New Zealand on long term is a pullback, which is already well underway. Remember, we said I was shorting this thing from here. Actually, no, I was shorting this thing from here, I think. Obviously, what I was looking for was that. Didn't get it. So I shorted it again there, got out, didn't get it. Yeah, you could short it on any of these peaks. You would have had lovely little trades, but now it is actually starting. So this is just basically a pullback short on this move. Market structure is short. Fundamentals are short. Everything's short. COT are short. Just go short. So it's a pop to the upside. So when we're looking for shorts, obviously, we look for ADR hits to the upside to get in short, and we look for RSI extensions to the upside. So we've got ADR hit to the upside. Haven't got anything on the hourly. So there is potential for this to come back up. Obviously, there's a lot of potential for this to come back up. So we've got two propulsion gaps, which are untested, that one and that one. That one's already tested there. So that break there and that break there are potentials for a retest. So if you get in here, it could well come down. It's going to need a pretty strong New Zealand dollar, isn't it, to get this down? But if you look at where we are bouncing at the moment, this grey area that I've got on the chart here, where we got that bounce, this is what we were looking at for a potential bottom here. And it's failed. Yeah. So we got the initial bounce. We were looking for a trade back up into propulsion. We didn't get it. We got a 3-day accumulation, dropped and broken. However, it has now broken back above. So it's very tricky, difficult to tell where this is going, whether this is actually a breakout or this is a false breakout and we're going to come back up and test. Hard one to decide. But again, it's not got any extensions on RSI for me for a short. However, it is an ADR hit. So your decision on whether or not you take that one. But it certainly looks like it wants to come down at the moment. And we've got that untested propulsion to come and do. However, we've got that untested propulsion to come and do as well. You know, there's always an argument for going long. There's always an argument for going short. That's why we position trade. We get into a position in the direction we think it's going to go. We have a 50-50 chance of it being right or wrong. If it's wrong, we scale in. If it's right, we get out. Simple as that. Welky, does the euro US dollar also have a gap on the 15-minute time frame? I don't know. I haven't looked at it this morning. Yeah, there's a gap. Gaps get filled. Whether it gets filled today or whether it gets filled in the future, I don't know. You've got a 50-50 chance, basically. That's why gap fills are great. They work or they don't. There's a 50-50 chance, yeah? So this gap looks like it's getting filled this morning. In fact, we're just about... Oh, TP'd it already. So there you go. There's my gap fill done. $500, 2%. Very nice. So I'll be looking for shorts. So you got two plays here. Right now on the DAX. I'm still short on the opening range breakout. What's my short on? I don't know what I've done there, but anyway. EA's got me out of the... oh, yeah, I've hit target. Of course I will have done. Yeah. So you got two options now on the DAX. Now we've got the gap fill done, pretty much. It's never to the pip. Somewhere around here is a gap fill. And it's also yesterday's low, and it's also ADR. So, you know, when I talk about in the course and in the videos, confluence, this is what I'm talking about. We've got a gap fill, potentially now a long. We've got yesterday's low, potentially going to sweep and go long. We've got ADR, potentially where the market will reverse from. Yeah, three things are telling you there's a potential long opportunity here. So really good opportunity for long. And what have we got? A target to aim for. Yeah, but what have we also got? Loads of weird, wonderful things going on in the world with this SVB collapse. So have you got any bias or any clue what the hell the market's going to do today? No. Could go 300 ADR to the downside, couldn't it? Who knows? But if you look for potential signs of strength down here, I would say probably you want to look for this as an area. So every high and low of every day always has limit orders placed at it. So the market participants, retail and institutional, will always buy the lows, sell the highs. So you're always going to have limit orders set to trigger at yesterday's low and yesterday's high, which is why when we get down to these levels, you usually see some kind of reaction. And it's just purely limit order triggers placed in the market by market participants in the hope that they can get a quick, tight entry. And it's literally a case of, if I can get in here tight, fantastic. I'm going to get a tiny little stop and my reward is going to be 15 to 1. That's what they're looking for. It's a quick buck, basically. You've also got institutional investors who trade the daily charts, looking at these levels, and what they're doing on the daily is basically buying the lows. So if you have a long-term institutional, like this is the 72.24, this is the monthly and quarterly moving averages. If you have got a bias to buy at the moment, because that is the bias of the market, you will buy every low that comes in of every candlestick. So there will be loads of orders sitting there. There'll be orders sitting there. There's definitely orders sitting there to buy this up. So the institutions will be buying the lows, and they're building positions by basically just keeping buying the lows, and then they'll get out when it goes up. Just how the market's always worked. So this is a really good area, but we need some kind of confirmation of that happening. So some kind of hammer or some kind of bullish engulfing. If this thing flies through and eats these limit orders and collapses out the bottom, we know we've got a big ADR day on. So just got to watch what happens down here. And we're either going to get the ping back or we're not. We're not far away. So there's your gap fill if you were playing the short. If you've taken the opening range, if you've taken the pre-market 15, happy days. If you've taken the 5-minute ORB, happy days. If you've taken the 15-minute ORB, happy days today. So the EA basically has paid out big, regardless of which strategy you took this morning. Morning, Seymour. Please could you remind me the settings I need to change on the ORB for brokers that quote indices to 2 decimal places? It's covered in the manual. There's a bit in the manual about it. I need to find my, sorry. Products. Where am I? Tell you what, let's do it this way. This is much easier. Market reverse alerts. No, sorry, opening range breakout. Manual. Yeah, important note on 2-digit brokers with indices. Yeah, there's a screenshot here that shows you all the sections. I'll put a link in the in there. Okay, so we're breaking out the lows. So they're either going to get completely run over, the limit orders, because there's just so much volume of selling that the limits just basically get triggered and stops get triggered instantly, and that's it, it's done. Or we're going to find that this is going to get bought up, which is potentially happening now. We've got 1 minute left on this candle, so we'll see what happens when we get here, down to these lows. My ORB didn't fire this morning, so I went in manually with a price action toolkit with 1% risk. That opened 275 lots. Depends how you have it set up. I immediately set to break even and just banked almost 30k in profit. Very nice. It's very nice when a fat finger trade goes wrong. It makes you money. Somebody else said that this morning in the Telegram group. They forgot to change the settings on their ORB EA for the opening range. And they got in on the opening range an hour early and it's still banked. They would have got in here and caught that as an opening range breakout, which is fine. It worked. Okay, so here you go. The limit triggers are ordering. Limit orders are triggering. Early morning. So we are basically pushing. Right. Okay. Let's carry on with the analysis. We'll watch that and come back to that in a sec. We just had some news coming about the ECB. God, it's busy this morning, isn't it? Rate priced below 3.75 for the first time since February. Who? So this is the thing that annoys me about it. It's like the peak ECB rate priced below 3.75. Who has said that? Who? Doesn't mean anything unless you tell me whether, if Lagarde has said that, fine. If Goldman Sachs have said it, all right. If some bloke from the Telegraph has said it, whatever. You know, you need to know who said it. It doesn't mean anything, does it? We're not going to go to. We're going up to 3.5 basically this week, obviously on the ECB. So we're looking to target 3.5. Lagarde has come out very clearly and said she foresees at least another 0.5% rise, if not more. So who is coming out and saying that Lagarde is wrong? The person that does the monetary policy for the European Union is completely wrong. You know, you've got to back this up with the who, haven't you? ECB rate is 3. We're going up to 3.5. What they're saying is we're only going to go up 0.25 for the rest of the year on the euro when the euro is lagging every other economy. That doesn't make sense, does it? Look at their interest. Look at their inflation. Look at how fast inflation's coming down. Look at their unemployment figures. This has got to go up. It's not going up by... just you've got to take this with a little bit of a pinch of salt sometimes. Okay, so we failed the lows. They bought the lows up at the moment. So this candle, basically, we need to see this candle as an inside bar of this candle, i.e. not making a lower low and certainly not closing. If that closes outside of there, I would say it's very difficult to trade this today. That's the trade. I'm done basically on it. If you try and catch, this is where all the retail traders go wrong. This is why we have this data. Yeah. Retail traders right now are trying to catch this falling knife. They're trying to catch the very, very best possible price with the very, very tightest possible stop to get a mean reversion trade. Yeah, you try and catch a knife that's falling that fast, you're going to get hurt. It's definitely flushing out the lows, isn't it? So I would stay short on that. At the minute. Right, let's carry on. We've got 109 people in here again. 39 likes. Come on, guys. Thumbs up, please. Or thumbs down. I don't care if you don't like me, fine. Aussie dollar, US dollar. Aussie dollar, New Zealand, we've looked at. Aussie dollar, US dollar. That's an ADR hit to the upside. This Aussie's obviously had a big rally. I'm not quite sure why the Aussie's been so strong and overnight, but it has. But look what we've got down here. Yeah. So we've had a lovely reversal alert put in with a propulsion there. So if we come back and retest this propulsion, you can put a penny if you've missed the reversal alert, obviously, or you're not using the opening range breakout EA to get into your entries. Sorry, the market reversal alerts EA to get into your entries. Take a break of that low. You've got a propulsion target down there that's going to get tested. Very high probability you're going to test that as well. So that looks like a nice one short. We've not got any confluence from support resistance. So your next resistance is here. So there's a little bit further to go on this. We've also got a propulsion gap there. So there's a small accumulation that broke there, which is a propulsion gap. That's just over 125 ADR. That ties in absolutely perfectly with the break of that level. So that is where I would say, ideally, you want to get in 125. So you might be a bit early on this one. However, what it might do is come back down here, do that, then come up there and do that, then come down there and do that. Think of the scenarios. What's it going to do? It's got to do that gap at some point. It's got to do this propulsion gap retest at some point. It's also got propulsion gap retest up there as well. So where we are right now, you're kind of equidistant between one of those two scenarios getting filled out. One of them is going to happen. We never know which. Aussie dollar, US dollar, CAD Swiss. So yeah, this is a Swiss franc. This one's already played out. Wow, this is still coming down. This CAD Swiss is falling out of bed so fast, so hard. So this has come off of ADR. So there you go. This is a gap fill done straight away this morning. Look. Boom. Reversal alert, and this looks like it's coming back down again. This. So potentially on this one, the worrying thing about this for me is look how extended we've been on the hourly, and look how extended we are on the 4 hour 6. I mean, it just doesn't happen, does it? We've looked at this one already. This level of strength is so rare. But there's not been a news event that's caused this, really. This started happening, and then the SVB thing has sort of accelerated it as the Swiss francs gathered momentum, basically. I can see this whole thing undoing, at least back up to there, if not higher, and getting a complete V-shaped recovery back up into the 24.72 zone. Yeah, so waiting for that moving average to come back down and drive the next leg. Still definitely like it short. But if you look at the bias on this, where's CAD Swiss there? It's a sell. Yeah, it's a big sell. There's no cop bias on it though, because we've got the futures market short the CAD and short the Swiss. Enoch, sorry, late on the like. That's okay. We don't mind. We just like likes because likes encourages more people in here. The more people come in here, the more I waffle. The more I waffle, the longer it lasts. So yeah, CAD Swiss short. Sentiment, everybody's long in this at the moment. Everybody's trying to catch these falling knives. What they've done this morning is entice more people in to go long. Yeah, so this morning what we've done is we've opened with a gap. Everybody's gone long. Where's all the liquidity? It's all sitting there. If they need more liquidity, where are they going to go? Down there. However, what I would say is, does the market need more liquidity? I don't think it really does at the moment, because it's just a super, super, super big drop. So potentially what I can see playing out here is something like that and coming back up. So although this is an ADR hit and we're dropping, I'm not sure we're going to make this low. Again, I think this might turn into the sort of terminal area for a pullback on this. It's too big, too fast. Everybody short on this is rubbing their hands going, oh my God, I'm loaded. As soon as we see that buying start, everybody that is short on this is going to see their P&L drop. When you see your P&L drop, what do? You pull your stops down, or you put an exit in the market. You start to protect your winnings. Same thing as I did on the DAX, yeah, this morning. We got down to here, and I was starting to see signs of bullishness coming in on that candlestick. What did I do? Protected my money. because I can see people getting out of these positions. So I'm going to make sure I'm not going to lose everything on it. And that's what everyone will be doing on all these big Swiss moves that we've had as well. So I think potentially we might see this start to do that. But I don't know. There's, as far as I'm aware, there's no real reason to be piling into Swiss at the moment. So I think we'll just carry on as we are. So yeah, nice mean reversion opportunity, nice ADR hit, but as you've got two completely opposing strategies. You've got a mean reversion short on an ADR hit to the upside. You've got an RSI extension on the 4 hour telling you to go long. And you've got a bias telling you to go short as well. So there's more things telling you to go ADR short today, but there's such an extension. Look how far away we are from the 24 moving average. I mean, we're so extended and exhausted. Elastic band theory, yeah, it doesn't get much more stretched than that. I think we're going back up. But there's no reason why you can't get in with an ADR short today. Get out and then get back in on that way. So yens I've kind of covered. Euro odd, that's already played out. Oh no, sorry, it's a hit to the downside, isn't it? Yeah, so hit to the downside. So euros, I'm looking for longs on all euro pairs, really, at the moment. We've got the rates coming out this week. So as you can see on the bias scorecard, everything is saying to long the euro. Euro New Zealand and Euro US dollar are the only two, because there's no COT bias on those, because the New Zealand dollar, the market is long, and the US dollar, the market is long. The euro, the market is also long. So a long and a long cancels each other out. So therefore, the only thing we've got going negative on these is these fundamentals. And at the moment, because retail is long, that takes us back into range-bound activity. But as soon as retail flips back, i.e. as soon as retail flips long, we will be looking to go short, and then these will become negatives. These will become sells. The Euro US dollar is definitely a sell, as is the Euro New Zealand at the moment. But the rest of it's all long. So be looking for longs on everything, really, euro, and especially if Lagarde comes out with this 3.5 this week, and if in the press conference she comes out and says we are looking to increase rates, as she has done, by 0.5 for at least another 1 to 2, or 0.25 for at least another 1 to 2 rate announcements, the euro is going to rally. If she comes out in the press conference, like Goldman or like whoever's just forecast and said 3.75 is going to become our terminal rate, which means that we've only got 1.25 increase for the rest of this year, I don't think the market's going to be happy about that. We're waiting for more euro. She's been promising all the way along 4 plus. So whoever this is that's just come out and said this, which we've had no confirmation of, I don't believe it. So euro, be looking for longs on that one, euro odd. We've got a nice little propulsion gap there. So with ADR reversals, you're only looking really for quarter of an ADR to a half an ADR. So it's 33 pips. From that ADR reversal, you've got 39. So it's an easy little quick scalp up into there. Euro yen, we've looked at. Pound odd is extended. Same thing for the pound odd. Pound is a short. So pound's a difficult one against the Australian dollar because it's pound odd. It's a slight long from a COT perspective at the moment. We've got retail shorting it, so it's a long. So it comes out as range bound. But if you take retail out of the equation, you know, this is never going to be anything but range bound at the moment. Range bound to short, I would say. At the moment, obviously, we've got the big spike. We're up into the highs, which it's reacting at. So you're about to get a 4-hour reverse alert on this pretty much. So I'll be looking for it to come back down into here, come back down to test support at some point. So I'll be looking for shorts on it. Hourly, you've had your reverse alert. Your reverse alert has already retested. It's a bit of a tight one, but it's that. So coming back down to here. So I wouldn't really want to take that one long. However, it's already retested as well. Look. So you got this little propulsion move there. We're just testing that. I would expect them to add to their sells there, to be honest, and come back down, but could go up. It's not the sort of ADR reversal I'd be interested in really today. Pound yen, I've covered. New Zealand Swiss. Again, New Zealand Swiss, don't know what's going on with these Swissies, but this to me looks like it's just undoing Friday's move, which it's done. So you've had your ADR reversal off the highs. With what's going on at the moment, you've got to say they will probably pull money out of the Swiss franc. So everything that flowed into the Swiss franc and has been flowing into the Swiss franc, if it is related to what's going on with this Silicon Valley Bank scenario, we'll start to unwind all these positions. Yeah, that's the most impactive propulsion gap there. So that's where I'd really be looking to target. And obviously we've had the reversal and the retest. So I'll be looking basically for market structure to continue and try and get back up into these areas. And then obviously it can do what it likes. The Canadian dollar is pretty weak at the moment. CAD Swiss is a big sell. There's no real bias on it because that's what the bias is from the futures market at the moment. So they cancel each other out. But on the fundamentals, you've got to say it's a sell. So that is where I would be really interested in getting in. By the time we get up there, we'll be extended on the on the hourly, and probably 4 hourly. Yeah, so these are the targets here. If it's going to continue, we've also got that up there as well. There's so many of these. This is why I'm. It's so difficult with these yens and these Swisses at the moment because the moves that we've seen over the last week have been so violent. You've got lots of propulsion gaps in play, which, you know, these are our magnets. These are what market is attracted to a lot of the time, these wide range bars. It tells you where the institutional buying and selling has taken place. And these are the areas we always retest. When you've got structure moving to the downside, we come and retest the breaks of structure and the resistance. The support becomes resistance. So these propulsion gaps show you where the institutions broke those levels, and that is where we tend to come to retest. When you've got a move that's so fast and so hard, it takes a lot to get back up there. And when the fundamentals are saying one thing, it's very difficult to see how you would get back up there. It's going to take a week of climbing to get there. It's difficult to see, but that is potentially where we are headed. So it looks like a lovely short at the moment, but it goes against bias with a lot of these things. So your New Zealand dollar Swiss, it is a long, yeah. You've got COT bias long on this one, for example. You've got retail all short on it at the moment, all long on it as well at the moment. So that's why we would be looking to go short. But it's, you know, it's mixed messages all over the place on these things at the minute. But you've just got to get in a direction. And as long as you've not got something which has got a massive, you know, if you got a -11 and you've got a signal to go long, you can take it if you want to, but obviously you're crazy. So, you know, but there's, you know, everything can happen. The market can move against this. Yeah. This is long-term fundamental bias. Yeah. If you've got all your ducks lined up in a row though, like you have with Aussie New Zealand, you just don't want to be taking longs. So, so yeah, difficult one, these Swiss francs and these yens. They're very, very difficult to predict. US dollar CAD's the only ADR hit we've got that's not really related to those two. So this one, obviously, we've hit ADR lows. We've had the reverse alert, which is really ugly, long, extended thing. Big propulsion targets to the upside. We've got that big propulsion gap there, and we've got the gap fill to complete as well. So US dollar, assuming we are getting a sell-off in the indices, which is going to continue, the US dollar is going to pump. So I think this is a lovely ADR reversal long down there. I think I'm already on that one, aren't I? Yeah, I'm already long on that. So I like that as a long. Look at that. We've collapsed. We're 125 now on the DAX. Where I got out. Never mind. Money's money at the end of the day. So there's all your ADR hits today. We'll look at the RSIs as well. Most of these RSIs are going to be along the same sort of lines. Let me just catch up on the chat. Not something I would want to repeat every day, but I like to learn from my mistakes. Best mistakes are the ones you make. The best ones, well, the ones you learn from, obviously, are the best mistakes. 1.4 thousand views on Friday. I know, it's good, isn't it? I like this. We've got 128 in here now, look. There's only 60 thumbs up still, though. Half of the people in here don't like me. Depressing. There's only 117 now. All right, I'll let you off. Tadpole, 104 watching, 46. Oh, yeah, just hit the like button. Education and fundamental. Great stuff. Good. Aren't those gaps between the candles called fair value gaps? No. They're called what you... Right, so you're obviously new in here, Balbar. These gaps are propulsion candles. Right, so it depends which school you go to, right? So if you go to the school of ICT, he calls these fair value gaps. If you go to the school of me, I call these propulsion gaps. If you go to the school of, I've forgotten his name. If you go to the school of forgotten his name, I'm just going to find his school. This guy. If you go to this guy's school, who invented them, yeah, they're called wide range bars. I never remember the guy's name. I really must. It's on the tip of my tongue all the time. I can never remember his name. Right. But in 2002, you can see by the website, this guy invented the wide range bar strategy. Yeah. So ICT took this and called it something else. I called this something else, but it's the same thing. It's basically a large candlestick. Yeah. Yeah, it's a big move by the institutions in one direction. Call it what you will. Everything you see, you'll learn this, and I talk about this virtually every day. Everything you learn from every course you pay for will be exactly the same. Do one course. Once you've done that one course, probably Baby Pips is the best one to do because it's free, or mine because it's free. Do that one course, and then every course you go to afterwards will tell you exactly the same thing, except they will spin it in a different way and call it something else. Yeah, there is only the very basics. All you need to know in trading is that the market moves, which is what we call market structure. Those movements go from previous areas of support where we bounce, and they change to what we call resistance. Yeah, support, resistance. So you need to learn support and resistance. You need to learn market structure. And you need to learn that there is only two things that will ever happen in this market. It will go up, it will go down, it will move through time, and you have absolutely no control over this, and you cannot predict it. There is no indicator in the world that can predict the future. Stop buying them. Unless you see a value in them for any reason, like mine, because they tell you something that is not trying to predict the future. And that's literally all you need to know. Everywhere on the course, every course you take on the internet that you pay for, every mentor you speak to, they will all teach you the same thing in a different way. Call it what you will, but the guy that invented them was not ICT. The guy that invented them was this bloke. Everybody takes it and they spin it and call it something else to suit them. Yeah. And I don't hide away from the fact that these are wide range bars. Yeah. The indicator that I use on my charts is called the WRB hidden gap. It's a wide range bar indicator. All it is literally a propulsion move. That's it. So it shows you where the big players started to move the market. And these areas act as magnets because we want to come back and retest them. Yeah, that's why we come back and we pull out of them, because this is where the sellers enter the market. Yeah, the sellers are saying we want to go short. The buyers come back and say we want to go long. The sellers go, no, we're well in control of this, mate. You're going short. This is why we see propulsion gap bounces. Boing, boing, boing. Yeah. It's just market. It's just theory. All it is identifying the underlying movement in the market, the mechanics, what make this is the engine, basically. Where my traders with average thinking at? No idea what that means. Looks like ICT has made his lingo the industry standard phrase. Yeah, it's basically he's popular. He's really good at marketing, isn't he? He's good at marketing, puts a lot of content on the web, and retail crowd follow him, which is great. This is why we do the opposite to him and we make the money. Anyway. I'm a beginner trader and I'm trying to soak up as much info as possible. Yeah, well, you'll get a lot here. Go here. Go here. Go to this bootcamp. It's all free on the website. Position Trading Bootcamp. Absorb that 5-day course. That will teach you everything that you need to know. Everything else is rubbish. In my opinion, because it's my course that I put out there. Mumo, how do you fit the Trade Manager dashboard to an entire chart without showing the currency pair? You just drag it. All this is, I'll do it on another one where you can see. It's better to see it on this one actually. Yeah, so you got this is just a window the same as that sits in, yeah. And there's your chart. Just grab that, move it up and down. Ta-da! It's magic. Secondly, can't get my EA to show the trades taken. Right, so it doesn't do that as standard. What you need to do to get your trades taken is to go into your account history and drag them onto the chart. And then it will show you the trade. Yeah. So you need to drag them onto the chart. MT5 does that automatically for you, but what you have to do is going to show trade levels and show trade history. MT5 is different to MT4. But I only use this. Look at this, 175 ADR on the DAX. My God, look at it. Talk about falling out of bed. Where are we going today? Oh God, we've gone. Okay, so that's your monthly low taken out. Wow, look at that. Look out below. What have I been saying about this bear market not being over, everybody? Gap fill's going to be done ahead of the New York Open by the looks of things on the US indices. Huge moves. Huge today. Big moves. I came across the FBG from a different guy 10 plus years ago. His course is called Trading the Buff. Trading the Buff? Never heard of that. Okay, there you go. I mean, yeah, that cements my point, doesn't it, Big Papa? Oh, trading in the buff. Yeah, so he's a naked. I would imagine he's a naked chart trader, isn't he? That's PDF. Trade buff. But yeah, I mean, what's that? Trade buff. John Templeton, 2009. See? Look, this is a wide range bar. 1, 2, 3 gap. Yeah. This is a wide range bar. This is not this guy. This guy has taken this from the guy that invented the wide range bar and called it trading in the buff. Yeah. So all the same stuff. This is what I mean. You just don't need to. Look, everybody's going to teach you the same thing and call it something else and charge you for it. This is the thing that gets my goat. Is the charging thing. Everybody charges you for the same thing over and over again, and you just buy it because what they do is go, I've got a secret source from the banks. Don't trade these candlesticks, trade these candlesticks. I made my money from doing this. Really? It's the same thing as everybody teaches. It's all free on the web. The thing that you pay for, right, which I don't have a problem with, is mentoring, yeah? So if you take a course and the guy that takes the course does stuff like this every day in a live room, and goes, answers your questions, does it all live and shows you it all playing out in action, why he's doing what he's doing and what he thinks is going to happen, and analysis using all the strategies and theories taught, fine. If they just sell a course, which is a load of videos, it's just going to be the same waffle. Yeah, you pay for mentorship, pay for somebody to teach you to do it and hold your hand. That's what is worth money, not a course. Do one course, like I say. Do my course, it's free. And then pay someone to mentor you. But they will probably tell you to do exactly the same thing in a different way. Yeah, same stuff. Oh, everybody you see out there that's trading, All these big YouTubers that have got these like 27,000 views in the live rooms and that sort of stuff. They're just doing support and resistance. Yeah. It's just learn support. If you learn support and resistance, you'd make money. That's all you need. Who's right? I'm a new subscriber. Glad to be here. Cool. Do you do mentorship? You're in it, Mandy. You're in it. I'm here right now, answering questions, doing it for free. Traders with average thinking, twats. I like that, Anna. That's a good one. I like that. Traders with average thinking. I like that. I want to use that. Did you see my? I showed you this in the last week, but ever since YouTube did this for me on, was it Friday before last, wasn't it? So that was the 9th. Where are we? 13th. When was the 9th? That's the Thursday one. Yeah. So this stream, I think it was. Let's have a look. Yeah, this stream. Look at the URL on my Thursday stream. You might have to zoom in, but the URL is 01TWAT_7FC. That is the URL YouTube gave me on that Thursday. On the Friday morning, I had nothing but those contacting me in Telegram and in MQL5 Marketplace. So it's obviously something that YouTube did to fire off idiots. Anyway, let's do the RSIs. We haven't got any hourlies. The only hourly we've got is the US dollar Swiss today. That's been extended and embedded because it's a Swiss franc pair since Thursday last week. Yeah, so this was a long last week. If you got this long, you're in anything you've taken, your Swiss franc related, you're in drawdown on it at the moment, and probably quite hard. So there's not a lot you can really do about it. The Swiss franc, I think, is going to weaken this week to push back. So I think we're going to see some weakness coming through. If you look at the COT positioning, and again, we're 3 weeks behind on COT at the moment, unfortunately, because the CFTC's had a data issue. But if you look at the Swiss franc positioning, they are short. 66% of the futures market is currently short on the Swiss franc. We think that was obviously from we're 2 weeks, nearly 3 weeks behind on that information at the moment, but nothing we can do about that. But if you look at the Swiss pairs, every single Swiss pair at the moment is a short because the market is longing the crap out of it. As soon as they stop taking long positions and trying to catch the falling knife on this Swiss franc, this will shift that way. We will then, this will shift so that they start shorting it. We will then start to go back up. So we need retail to sort of stop, but it will just happen anyway, because everybody that's been short on this for 2 weeks, for 2 days, is going to need to take profit. We've got a gap fill opportunity on this as well. So this looks like a good spot. The US dollar should be strong, but again, we need to wait and see what happens with the CPI figures. If the CPI figures tomorrow are massively down, that will take a lot more weight off the Fed to increase interest rates. And if that does that, the Fed have got an opportunity to not increase interest rates, and that will weaken the dollar. So it's a really pivotal point. Whenever you're getting to terminal rates, as we are with these at the moment, let's go to their fundamentals. 4.75 we are at with the US at the moment. 5.25 is the expected terminal rate. That can come down. If this drops, if we get a negative 0.5, for example, and that drops down below 6, the problem is we've had our employment going up again, and that is another reason why they don't want to put interest rates up. So if we get a big drop on the CPI figures tomorrow, that will take the pressure off the Fed, and we could be looking at maybe a 5, or as the Goldman Sachs have indicated, a 0 increase. That will weaken the US dollar, and that will pump the stock market. So we may find that we're not actually going to get quite as much US dollar strength moving forward as we thought we were. So these squeezes, you know, some of these propulsion gaps get orphaned. Yeah, these big ones, massive one there. We got it's a hell of a long way. Look at it. It's 225 ADR to get all the way back up there. But occasionally we get propulsion gaps that get orphaned, like that one, like that one. Yeah. So that was FOMC. That was interest rates. Unemployment. Sorry, that was unemployment, and that was FOMC. It's a fundamental shift. We could be seeing that in the fact that everybody is moving into the Swiss franc, into the safe havens, and we're not going to get a push back up into these. And if the Fed, if the inflation figures come out as a negative, we could see a big drop and we never get back up to here. So it's a really, really tricky week. Every week's tricky at the moment for news, you know, but especially when you're off the back of a move like this. This is what makes it difficult. We're expecting some kind of mean reversion and profit take. But if the guys here short get a CPI, they're going to add to their position if they get a negative CPI, and this thing's going to come down harder. So tricky one. It's only just extended. So if you're not in it, I would probably not get it. It depends if you're using a stock. If you know, I'm talking about everything I talk about on this channel is all about position trading. Yeah. Or if you're using a stop loss, obviously, you know, going in line with expected direction, but with the bias scorecard, etc. But if you're not using a stop loss, I'd be very careful with the US dollar at the moment. If you're trying to build a position to get this move, especially against the Swiss, I'd be a bit careful. So speaking of that, obviously, moving over to the 4-hour RSIs, this is the one we're looking at now. We are massively extended. So going back in time, yeah, when we get this extended, what we tend to get is a correction. Yeah. However, we have CPI figures tomorrow. So, and this is what I'm saying. The fact that we're down here indicates a very high probability of the market being stretched, elastic band theory, yeah, and expecting a profit take move so that they can actually make money off of this move. However, you know, if you're holding this here and you've got in somewhere up here as an institution, you can protect this position with no risk whatsoever. And if the CPI figures, wait for tomorrow, wait for the CPI figures. If they come out as negative, you can add into that position and take it back down to here where you're going to find some support. So there is an argument for a bigger push, even though with this extended. But if you're going to get in with a position trade, you're getting in here at this support. Failing that, you've got that little wick there and that little area there. So this area here, I would look for support as well. And then we've got this area here at 175 ADR, which is an old daily level. There. So you've got another area of support coming up down here as well. So 1, 2, 3. If that happens, if that scenario happens, yeah, you're going to get a profit take off of that. And it's going to be a big one, obviously, because 4-hour will be just, you know, somewhere down here, wouldn't it? Where we are, funnily enough, with the CAD Swiss. Yeah. And it's popping. Trying to, anyway, isn't it? Trying to. Morning, pot goiter. Make an image of TWAT. Yeah. US 30 is bleeding. NAS 2, everything's bleeding. Euro yen dip down. Everything's bleeding at the minute. Just be careful. Be very careful today. Get on in the direction of the bleed. There's more ADR hits going, by the way. Everything's moving today. This is lovely, isn't it? This sort of movement on a day where there's no news. These are the days we normally sit here twiddling our thumb and do absolutely nothing. Yet today we've got huge movement, which is lovely. So 4-hour RSIs have covered the US dollar Swiss. US dollar yen is also extended on the 4-hour. So again, opportunity for a push. We've had an ADR hit, which has bounced, and it's bouncing back down again. So we've hit ADR, bounced. Now we're doing it again. So this is a double bottom bounce potential here. 4-hour RSI extension. So again, US dollar, these safe haven pushes Not sure about them. I don't think this SVB thing is enough reason for this. I don't think it's that big, really. If it was something, if it was Citibank or some huge bank going under, then I would be like, yeah, fine. But this isn't a big bank. This is a bank that was overexposed and admits it was overexposed on the housing market, which has obviously suffered for inflation and interest rates. So it's their cock up. I don't think the other banks have got a problem. So this is a temporary, I think, which will be undone. So that is potentially a good looking long. However, obviously every trade you take today, you need to be aware you're taking any US dollar trades. You are trading straight into the second most important news announcement of the month for the US dollar, which is the inflation figures. So if you're getting in, yeah, again, you got 50-50 shot of that news driving your profit or driving you down to second entry. Yeah. So good looking opportunity there on US dollar yen as well. New Zealand dollar Swiss, it's always basically the same stuff we're going to be looking at as we've looked at on ADR. Yeah. So US dollar Swiss, New Zealand dollar Swiss, that's already played out. That one, it's already gone. Missed it. So you would have had your entry on that one here in Asia. It's a really ugly entry, isn't it, this morning? But if you're using the EA, the EA would have got you into that this morning. And you'd be in it now, long. Pound US dollar. Okay, so pound US dollar is a big short at the moment. Sorry, just one sec. I just got to check my phone. I got the doctor phoning me this morning about my shoulder. So I just need to check. We'll be ringing between 4 to 5. Oh, right. Okay. Cool. That's all right. There you go. I've got to worry. So yeah, US dollar, the pound US dollar is a sell. At the moment, we've got retail offside here. So everybody is shorting this. So everybody's in the right way. So obviously we want to be kind of long in it. What's it done? Gone long. So we are extended to the upside. However, retail are all short on this at the moment. So just be aware that they will probably be grabbing liquidity until retail stop doing that. But at some point, they will give retail their reward and we'll get pushed back down into these propulsions. So the 4-hour extension, you've not got an alert on this one, obviously, because of the speed of movement. M5, you've had it, but you haven't on M15. So H4, you typically be looking at M15 for your entries. This is a really good example of why, as I said, I've switched over to H4. I teach on the bootcamp H4 M15, yeah, and H1 M5. What I'm finding is your entry is going to be here on H4 M15, yeah. On H4 M5, you're in up here this morning, yeah. So I'm actually finding that using any of these RSI extensions, but using M5 for your entry is actually pretty beneficial as long as you're scaling your entries decently. So that is good for a short, but obviously you've missed it on there. M15, you're not going to get it until down here, and at which point we are basically doing a gap fill, which you're probably going to find some resistance at, so support at. But yeah, like it as a short, definitely. Pound is not good. Pound is a short at the moment, unless the Fed come out and say something crazy after CPI tomorrow, which, can happen. This is why we pay attention to fundamentals. Yeah, it doesn't matter what the technicals are saying. It's the fundamentals that drive the market. However, technically, you can't deny that is a beautiful resistance. So, and we broke that low. But, this is a balance, price discovery, fail, back into balance. So I'll be looking for a move back down into here, definitely. Pound New Zealand, nice double top. We looked at this area on Friday. It's rejected out of it very, very nicely. So that was an extension on the 4-hour. You would have taken an M5 reversal alert on that, which it's a bit of a messy one as well, isn't it? Because we've had this gap, but your market break, your break was really there. So that's kind of your M pattern there, but it's not, it's messy, isn't it? Pound CAD, 4 hour, very nicely extended. Again, same scenario. There's your very messy M. I had a short on that on ADR on Friday, which worked out very nicely, that trade there. But yeah, like that as a short. Still looking at the hourly. You've got this has been very, very orderly on the way up. Yeah. Like it back down into support somewhere. So there's plenty of room to the downside. We've got a little propulsion gap, but that wasn't really much of an accumulation. 125 ADR on Euro Swiss. Pound CAD, remind me where I got to. Euro Swiss. Euro CAD as well. Euro's coming down really hard today. Thanks for the follow, Stuart. And Freeze. Sorry, I've missed everybody who's been following this morning. I've missed you all. I've got my volume turned down. That's why. Can't hear anything. Sam, Freeze, Stuart. Thanks for the follow. So yeah, what was this? I'm on the wrong platform now. Hang on. And thanks for the follow, Stuart. No, I just said Stuart. Why is it repeating itself? Oh, everybody's just subscribed at exactly the same time for some reason. I don't know why. So yeah, Euros, be careful. All these Euros are coming down hard. Ahead of... Oh, hang on, what's that? Traders. Who is this? Who are these people you're getting this information from? Traders reduce their bets, the ECB rate hike as much as 31 basis points to 3.56. Okay, so this is why the euro is coming down. I'm not quite sure where they're getting this information from, however. So we've got the rate hike on Thursday and the press conference. So if I was you, I would pay attention to that, not what you're seeing on Financial Juice at the moment, because there's no confirmation of where this is coming from. But it sounds to me like the market has heard something that's saying that Lagarde isn't going to increase the interest rates as much moving forward. I still think we're going to get the 3.5 on Thursday, but we'll be interested to see what the forward guidance is from the statement on Thursday. Maybe we might be seeing a bit of a weak euro moving forward. We'll see. So pound odd was the next one on the 4 hour. Nice extension. That's playing out as well. So again, all these are playing out from this morning. There's your reversal on M5. Your M15 is the same. It's this overnight one. So you would have had to get in. Difficult to get into these ones, these H4s, to be honest. They were very extended, but you know, you've had entries from here. Look, so in all likelihood, if you're position trading this short, you would have been in here. So if you'd have got in on that one, you're out. If you'd have got in on that one, well, it's nearly an ADR. So, but if you didn't get out, you should have. I've got a trade in there, look. It's an ADR short there, which I missed half of the move. But yeah, I mean, if you got in on this one here and you didn't get out, like I did, you would have got out on that. So you shouldn't be in that. But if you were in that, you would have scaled in, and you're getting close to coming out of the position anyway. So yeah, nice extension. Just hard to get into this morning with the reverse alerts, because they were, you know, your entry is here. You've missed sort of half an ADR on the move, obviously. 150 on euro yen, really coming down this euro. Careful trying to buy this euro today, people, because it's coming down hard, and I think it's coming down off of this, you know. But you buy the rumor, yeah. Market's coming down, so not sure this is really meant to be coming down. Is there a setting on the ORB that allows you to continue scaling in profitable trades for trend moves? Yeah. So on the ORB EA, you can add to trades. So add to singles. So you just set that to yes, and you set how many pips before you want to scale in. So the way I use that is basically, have a look at the opening range. What is it? 48. Okay, so I'll say, well, if we get 48 further on, I'll add. Jeez, look at this thing, guys. Don't try and mean revert this today. Why am I not still short on this? It's very, very, very annoying. I've TP'd on everything, basically. But yeah, wow. 225. Very, very careful trying to mean revert this. There's no support. Look at that. 4-hour candle. Yeah. Do not try and catch that. However, if you are going to try and catch it, let's look at where we would catch it from. Here. This is where we would catch it from. But when we break this low, yeah. So we rallied. We did a little bit of a pop down. Yeah. We attempted that level multiple times. Back up. This is the only level of potential support. If this breaks, coming down hard. Very, very hard. But I suspect we might see some strength coming back into the Swiss franc as well. Yeah, we are. Look, this is the market pulling money out of stocks and putting it into the safe havens like the Swissy and the yen. So be careful with all these Swissies and all these yens. We could be getting all sorts of ADRs on these things today. Yeah, 225 ADR plus, I would say, on them. Potentially. We'll see how long the market sells off for, but Biggie, look at that. Very annoying when you look at the fact that I got out here. But, you execute your plan. My plan was to get in short. My plan was to do the gap fill. I did my plan. I executed my plan. It worked. Am I cross? No. Yes, it would be lovely to have $2,500 sitting there, but yeah. Don't see days like that very often, do you? Pound yen, here we go. Some more yen strength coming through. Yeah, they're piling into the yen, piling into the Swissy. You can't get on this. Well, you can get on it. If you hit the sell button now, but you've missed a lot of the move, haven't you? So it's tricky to jump on board these things. You can't. You only make money out of these types of moves if you're in them before they happen, really. Trying to second guess where to get in and get out of that sort of thing is very, very hard. Euro Swiss. Yeah, again, I wouldn't try and mean revert these at the moment. Pound Swiss ADR, more money coming into the Swiss franc. Euro odd. Sorry, Euro CAD. Sorry, yeah. Again, this is a long. But, there's nothing wrong with mean reverting it. You can see there, I mean reverted it short there. That was an ADR short. That was an ADR long. You can go both ways, but when you got moves like this, 175 Euro Swiss. Okay, so this is the market reacting to this news. However, typically when you see them selling off the euro, you tend to see the index pop. We're not getting that. So this is a catastrophic move off the back of the SVB announcement on Friday. So, yeah. Love to be on it, not on it. CAD yen, again, yens, be very careful. CAD Swiss, be very careful. Dollar Swiss, yeah. Today's a day to watch this. If you're not on it, watch it. You will get an exhaustion point. So you will find that this will exhaust at some point. We're back here where we should be buying it up. But I would say that this morning was a profit take move, and this is an add. So I would try not to get out of that. I'd try not to try and grab that. You can do, you know, it can work. Everything can work, can't it? The odds are the same. Every single time you take a trade, one of those things is going to play out through time. No one can foresee which way it's going to go. There's no indicator that predicts the future. So you can use the indicators we use to tell you when there's conditions where it's favorable to get in, but whether it works or not, down at the market. Hafiz, Bro Gold. Bro Gold? I've only got gold. I haven't got Bro Gold. I'm an only child. Friday, I would have said short it. Today, I would say long it. Tomorrow, when the CPI figures come out, I don't know. It depends what the CPI figures are. But it was a short all last week until this thing happened, and what we just need to see what the market's going to do next. Need to let it settle down. It's in free fall at the minute. So, but we're at resistance, obviously, which has held this morning so far. We're retesting it again. So if it is going to be a short, if CPI goes up tomorrow, this thing's coming down hard. So you need to speculate. What are you thinking? Where are you wanting it to go? And what is your prediction on the future, really? So if you're predicting higher CPI figures, yeah, getting short. Got a gap fill to do as well. At the moment, we haven't gone anywhere today, have we? So you sell the highs and buy the lows. We're up at the highs, sell it. Back again. 4 hour extended propulsion target to the downside. Support bounce. Sorry if I missed it. How is the fundamentals EA going? I haven't missed it. Haven't talked about it. Sorry, this is another EA. So basically, this was the hedging EA, which I was gathering data on drawdown control from, which is great. So ignore that because it wasn't trying to make money. It was trying to gather information, which it did. And I got the information I wanted, which is no. So this is the hourly hedge strategy that I've been planning on. So this is I've started this running this morning. So far it's banked $500, which is nice. And it's still running. So that's not that one. This is the sentiment EA, which I closed two of my MT4s out on the VPS, yeah, because it was getting a little bit overloaded. I put MT5 on it, and God, MT5 drains your VPS. It's just hideous. The CPU it needs for opening a number of pairs. I haven't even got all the pairs running on it. Look, it won't even open. I can't show you the sentiment EA because actually I can probably show you. Oh, no, I can't. But yeah, it's going well, but I can't open it. Euro 175. There's either the mother of all mean reversion plays setting up here, or you just do not want to get in front of it. Let me just try and load the VPS again. See if it's my connection or see if it's your VPS. Diddly diddly ding. Come on. No joy. It'll be all right later. The problem at the moment is there's a lot of data throughput. So because this sell-off, there's so much tick data coming in across all platforms. You'll find this if you run multiple VPSs and you run multiple accounts on VPSs, you'll find that in high volume instances, you'll struggle to do anything on your VPS because it's just too much overload. I can't get into it. But yeah, it was doing well. It banked. So far this morning, it had closed out $1,200 of loss. It was sitting in 5.5% of drawdown. I can't tell you what it's doing now. I have no idea. I can't get to it. So yeah, I'll update you this afternoon. I'll do it this afternoon. Okay, we are 250 plus now. 50, 100. This is 275 ADR on the DAX, 275. This is something fundamental here. Bank of England peak rate priced below 4.5 for the first time. ECB falling below 3.5. Right, so they're anticipating all these terminal rates. 4.5. I can't believe 3.5. I can't believe that. Not with that. Surely. Don't know. We'll see what Lagarde says on Thursday, but I don't see that. Right, so that's all the RSIs and the ADRs covered. Today is kind of a scratch day. I'm not going to look to get into anything really, I don't think, today, because I'll just carry on trading what I'm trading at the moment. I'm trading everything in line with bias. That's it. So I don't want to try and catch this. If you do catch this, your likely pullback is going to be up to yesterday's low, which isn't there actually. It's not there at all, is it? It is. Or is that yesterday's low? Oh yeah, it is. Yeah, sorry. So yeah, your pullback is coming to retest this. So it's a hell of a move. Really interested to see what New York does this afternoon, because New York is already, all the US indices are already selling off, obviously, in the same way. So New York today could well be that sort of thing. They've done everything in Globex. I don't think there's going to be necessarily much left for this afternoon, so we'll see. A few words on gold. I've just done gold, Thomas. Probably missed it. What's the manager called? Trade Manager Dashboard. It's on the website under Indicators, Trade Manager Dashboard. I'll put it in the chat. There you go. With some of the big moves on two pairs, my average is within 2 ADR. Yeah, that is nothing you can do about it, Michael. If you've got averages in 2 ADR, then yeah, things like the CAD Swiss. You know, we touched on this on Friday, I think, didn't we? When you've got these huge propulsion moves and there is very little opportunity, that's the only reverse alert you would have got. You had no reverse alerts from 125 on pound Swiss. Go down there, get out of my way. Yeah, you had a reverse alert there, you had a reverse alert there. So the likelihood is there's something like 80 pips between those two. This is a 53 ADR pair. Yeah, so it's 1.5 ADR before you get any buyers re-entering the market. There's nothing you can do. So you are going to have more stretched US dollar Swiss ADR. They are really coming in for this Swiss franc this morning. Be interesting to see what they do when they get to these lows. See if there's any limits triggering down here. So yeah, it's nothing much you can do about those, unfortunately. You just have to sit and wait. This will all undo. It's just what we're seeing is some kind of fundamental shift happening at the minute, based on obviously all this news from last week. So, and where they're getting this from, I'm not sure. Be interesting to see if Lagarde comes out and says something. Quite often when you see this, because obviously you got to think with the central bank governors, their job is to keep their economy and their currency stable. When you see things like this happening, this is when they turn around and they make statements out of the blue and go, and they intervene. And all of a sudden they go, I'm not quite sure where these rumors are coming, but, and Lagarde has just got to say, we will be increasing our interest rates by a further 0.5% in the coming quarter. Bang, this thing's back up here, and all of a sudden you're rallying. You're coming back up into here. Yeah. Buy the rumor, sell the news. But trying to buy something that's falling like this is very, very difficult. Obviously, there's no price action that's telling you to get in. Yeah. Look at these green candles. They're inside bars. Well, that's not an inside bar, but you've got an inside bar. Then you've got a new low. Yeah. We didn't break that high. Yeah. Then it collapsed. Never broke that high. Never broke that high. Never broke that high. At the moment, this is where we are. If you don't break that high, this is bearish. So there's nothing at all has told you to go long on this all day so far. So, you know, same as you'll find on the Euro Swiss. Zero. Why have I got no Euro shorts? Never mind. What's the sentiment? This would be interesting because the sentiment EA. Oh, look at that. Euro Swiss, I'm short. I really want to get the EA up. Well, I'm not short. The sentiment EA is short. Oh, and I want to see what this is doing. No wonder it's struggling. It's sitting in so much profit. It can't open. Look. What if I minimize that one? Gosh, nothing's working. Nothing's working on there. There's just too much tick data coming through. I'll tell you what I could do. Let me see if I can open another MT4. Sentiment, that account there. Let me just open another MT4. One sec. Went short on Euro, US dollar, and Aussie dollar yen. Passed your 10K Fidelcrest challenge. Nice one. With 2 trades. Very good. Let me just log in on this one. This is an old MT4. Oh, Christ. I don't know what the server it is. Let's try that one. Shout out. So, I'm just going to see if I can get into the sentiment EA on another terminal and server there. Yes, I think we might be in. Have a look at this one. So this is the sentiment account. So we have banks, pound Swiss. We're out of pound Swiss. Let. Boom. Yeah. So pound Swiss. Was a short. Sentiment EA took a short. $1,000. Thanks very much. So let's see what we're in drawdown wise. We're in 2K a drawdown. I'll just see if I've got one set. I'm not hiding stuff. I'm just saying I don't know what I've got on this terminal. I don't want to reveal my logins and stuff. I don't know where my indicators are. That one. There we go. Cool. Right. Okay. So this is the sentiment one. There we go. Cool. I'll open this one up later as well so we can see what the hell's going on. So we're sitting in 2.57. We're 1,100 down today. We only started trading on this account. Let me just adjust this. Was on MT4. Why are you not working? Oh yeah, sorry. Oh, Christ. So we started trading on Tuesday, wasn't it? So it's made 17 grand, 355%. That'd be nice, wouldn't it? So he made 17%. 17 grand. We're sitting in 2.3. We're going to bank. Aussie dollar yen's going to bank, I would imagine. Aussie dollar Swiss will bank. CAD Swiss will bank. Euro Swiss will bank. So we're probably going to bank in the region of 3 to 5k today. So euro yen long, that's the only one that is really in drawdown at the moment in 2%. Everything else is absolutely fine. Everything's under 0.5%, 1%. So euro yen's really the only thing that it's struggling with at the moment. As you can see, it's been scaling. Oh no, sorry, that's it's been scaling out of the euro yen trades. Euro yen, there you go, it's just scaled out of another one. Good timing. So we're scaling out of these euro yens to keep on top of the drawdown. RSI, look, 6 on the 5 minute. Collapse. We just, so look, literally no one's buying anything. Look, that's the low of, was that the low last month? The low this month? 24th of Feb. $14th, 10th. So there's your monthly low. Shut up. God. Yeah, so there's your monthly low. A long way to go. Yeah, interesting. I'll just turn the alerts off on the dash because that is annoying. Yeah, doing well. I'm doing very well. Obviously, it's getting caught offside on this one. That's the only one where retail is actually milking it at the moment. Everything else, retail is getting milked. So Aussie dollar yen is about to bank any second now. But yeah, going well. Retail. But as I say, this is the first, when he started testing this, oh, bloody hell, it's done it again. Look. This is a glitch, isn't it? This is definitely a glitch in this system. This is a glitch. I have just selected the 7th. Bang. Adjusted. And it keeps changing for some reason. I don't know why. MT4. Let me just shut this, minimize that for a minute. We'll come back to that later this afternoon. 225 euro Swiss. 150 pound Swiss. We're going to get a full house today, I reckon. New York in complete denial. Crypto Tali. Yeah, Bitcoin. I love it. I love watching people burn. Bitcoin had this little rally on Friday for some reason. But yeah, boom. Look out below. Look out below on crypto. Feel sorry for everybody that's buying this up. Jesus N, welcome back. Yemen, NAS and Germany 30 is pulling back now. Are they starting to pull? Yeah, we've got a little bit of a reversal starting. That's good. Morning, Brian. Missed the open. Time change screwed you up. Oh dear, you missed it. We milked it this morning. I milked it this morning, but yeah, no one could foresee this. Obviously, I got out here. Lovely, short, but yeah. If only I had a crystal ball, I would be a multi-millionaire. Yes, Jesus N. The situation will be solved. President Biden will speak this morning to address the situation. As soon as today, the problem will be resolved. Federal Reserve will not make any more hikes. I don't agree with that, but we will see. We will see what the market says. Biden's got nothing to do with obviously anything. What he says is irrelevant. He can move the market, but he can't do anything. But yeah, it'd be interesting to see what the Fed say. So the decision the Fed's going to make is based purely on tomorrow. So when we see what happens with CPI, yeah, that will make their mind up. If CPI goes up, yeah, the Fed will have no choice. They will have to hike. If they don't hike, they go into recession. Yeah, if they hike, idiot banks like Silicon Valley will go pop. But then that's their fault. They're an idiot bank. Why would you put 56% of your entire investments into the housing market, which is affected by inflation and interest rates, when everybody in the world is expecting, and including the Fed, have said interest rates are going to go up? They're just stupid. They blew their account, basically, by overexposing themselves to the housing market. So that is not going to affect the Fed's decision. The Fed's decision is affected by fundamentals. These key fundamentals here are what affects interest rate decisions. So just because one bank that is stupid and actually in the grand scheme of things is actually a micro speck of sand, if you think about it, it's a bank, yeah, with an overexposure in the housing market. It's not, the rest of the banks are all fine because they're not overexposing themselves. If you think about it, there's not actually that much likelihood the Fed's going to change its decision. But we will see. They may do. It's impossible to tell. But certainly the Fed will not change its mind based on one stupid bank. Yeah, they will maybe bail. Yeah, but they won't change their. It's like saying, oh no, Amazon's gone bust. Crap, that means the world's going to collapse. No, it's not. They're just an e-commerce company. That bank that's gone bust is just a bank. It doesn't affect the world economy. It doesn't affect the economy of the US. Yes, there's a load of businesses in the US now that have got assets frozen. That will happen. That will unfreeze very quickly, and it is happening. It's unfreezing now. So all that's happening is we're getting 24 hours of business disruption. That is the grand scheme of things. What the news we're getting here, coming out about the ECB suddenly not doing their interest rates, unless Lagarde said that, no idea where they're getting that information from. Either that is a leak of Thursday's monetary policy statement from the ECB, or someone's making that up. And how many times have we seen this? In the last month, I've seen this many times. OPEC. Oh no, the Saudis are leaving OPEC. No, they're not. Oh. Yeah. This and what's going on with this market at the moment can be undone literally by one word. And that's the Fed coming out and saying, what? And they do that all the time. So just, don't read too much into it. But if they are going to stop increasing rates, fine, we'll deal with it. Yeah, we'll stop buying the US dollars. They're very simple. But until you get confirmed news, this is a rumor. You buy this. Although I wish I was selling it this morning. I sold it down to there. I'm depressed. Never mind. We'll see. We'll see. Time will tell. The next 24 hours is key, but I'm going to steer clear of everything at the moment until, if you've got big risk tolerance, then yeah, go for it. But I'd be wary. So that's your first bullish move we've had. We've got, ignore that. This is still just part of a collapse. So that's the propulsion gap target that we've got. And there, which is, how many times have we seen that? Yeah, saw it there, look. Panic, unpanic. Happens all the time. V-shaped recoveries. Whoops. Yeah. Panic, unpanic. Panic, unpanic. Panic. Don't read too much into this. This is just a knee-jerk reaction from the market. However, we could have another leg, We will see. Nothing we can do, We're just basically passengers on the train. Thanks for the follow. Ayupa, I missed you. Oh my God, I can't say your name. I don't even know what letter that is. Isaac, I know what your name is. I can pronounce yours. Welcome aboard. Sky News, Silicon Bank sold to HSBC. Yeah, that happened this morning. But it was only 3% of Silicon Bank, so it's not doesn't really affect us too much. Have I got the FTSE here? Yeah. So obviously the FTSE will be doing exactly the same as everything else this morning, but this is all a case of uncertainty. You pull your money out of the stock market when you've got basically every business in the world puts money into a bank. What are they worried about? Where the businesses have got their money at the moment and what impact it's going to have on them. Yeah. And this is also the stock market selling off banks. If you look at the stocks today, yeah, it's whatever. Yeah, if you look at the stocks today, AstraZeneca, blimey. Just trying to find the big, can you, yeah, highest to lowest. No, lowest to highest. There we go. It's Lloyd's are in there. Barclays are in there. Standard Chartered are in there. Yeah, this is a bank sector sell-off. Yeah, so when I talk about all the time how the indices move together in sync, and the reason they move together in sync is because of stock sector purchasing and stock sector selling. What we're seeing this morning is literally a banking stock sector sell-off. Yeah, that's why it's happening, because it's just them getting out of their banking stocks, waiting for the banks to say, there's absolutely nothing wrong with us. We have, look at our portfolio. We've got 20% in housing. We've got 20% in minerals. We've got 20% in this. We've got 20 in that. We've got 20 in that. If that goes pop, we're absolutely fine. They go, oh, okay, I'll buy my stocks back at a cheaper rate than I bought them at. Ting, happy days. Everybody's happy. What's happening to bank stocks now? They're getting cheap. What do you do when something's cheap? You buy it. Yeah. This is just market scared to crap that what's happened to silicon is going to happen to the rest of the banking sector, and it's not, because they're not exposed in the same way. 17K on my account is only $30. Wow. I don't know what that means. View on use of trailing stop loss. I use trailing stop losses. I never use them in strategies, basically. What I use trailing stops for is when I'm getting close to a TP. Yeah, so I haven't got anything getting close to a TP yet. CAD Swiss I'm selling off at the minute. So I'm in here on the CAD Swiss, for example. So we've just done a double bottom bounce, right? So what I will do is I will use a stop loss, a trailing stop loss, when I think, right, okay, that's getting fairly close to where I want to get out. So what I'll do is I'll stick a trailer on it. Yeah. Every time you put a trailing stop loss on a position, you will get stopped out. So you only ever use a stop loss when you want the market to take you out, because there is 100% probability that is what will happen. So if you use a break-even stop, right? If I move this to break-even now, what's going to happen? At some point in the future, it's going to break-even stop me, and I'm not going to make any money. Yeah. If I put a trading stop on this now, at some point in the future, it's going to come back and it's going to take me out of the market. So as long as you're happy to get out of the market, use a trading stop. If you don't want to get out of the market because you think this thing's going to go down further, don't use a trailer, because market structure says you will get taken out. The whole thing about market structure is we pull back. These pullbacks are going to take out your trading stop. So if you think you're in 2 legs and you think this has got 5 legs in it because there's a massive propulsion gap down there that we're targeting, and you put a trading stop on this, what's going to happen when we get down there is your stop's going to move. When we come back to test resistance, you're going to get stopped out. Then it's going to carry on its merry way. It's all covered in the bootcamp, all of this. You know, if you get stopped out of a position, like today, for example, where my trade on the DAX today, yeah? I hate MT5. Where I got out, yeah? 99% of traders will be absolutely destroyed and unhappy and sad and cross and angry with the market today. I made $500. I'm not cross, because that was my executed plan and it played out perfectly, and I played my plan to the T. Most traders will be cross because they will be viewing it as, I missed that. But that is the future. You cannot predict. At that point, there was nobody in the universe that predicted that at all. Yeah. So if you put a trailing stop loss on a trade, normally when we break that, we will pull back to it and you'll get taken out on your trailer. So when you put your trailing stop on, what I find most of the time is the market pushes down to a lovely point where you'd be thinking, I'm going to bank that. But what happens is your trailer gets taken out very close to where you had your initial, I'll put the trailer on here. You get about that much extra out the market. Really, they are pointless most of the time. Sometimes they work, but it's entirely down to you. But at the end of the day, if you put any kind of stop in the market, you will get stopped out. I don't like using stops because I don't like getting stopped out. Even in profit, I'd rather just take profit. But it's personal preference. Does the MRA also scale in and out automatically? The MRA scales in to positions in negative. It doesn't scale in profit, no, if that's what you mean. All covered in the videos. Everything you need to know about everything is on the indicator and the EA videos page and the trading indicator education videos. The website's got everything you need to know about every indicator in EA that I've got and that I use. Yeah, they're all on there. It looks like we're starting another leg. Look. So two things are playing out here, aren't they? One and two. Yeah. Someone in here is going to say, guaranteed it's going there. Show me your crystal ball. I want it. I am down on NAS and Dow 1.9% today. Hit the stop and dip down before London. You are down on the NAS. See, this is the incredible thing, isn't it, Yaman? Right? And this is what trailing stops do. It's very difficult not to have made money on this today if you shorted. The only way you would have made money on this today if you lost money on this today is if you had a trailing stop on too tight and you missed the move. Yeah, so here, I got in here. It pulled back. I did not use a break-even stop loss. Why? Because if I'd have used a break-even stop loss, I would have got broken even. That's what it's there for. I'm telling the market to get me out with zero profit. Why would you do that? It's ridiculous. Yeah, I had a stop up there. I'm either saying get me out at my target or get me out at my stop. I'm not saying get me out somewhere in the middle just because you're moving up and down, which is what you do every day and you have done for the last 25 years, 100 years. You know, it's just stops get you out. Stop you out. Stop you making profit. That's why we call them a stop profit in here, not a stop loss. They stop your profit. Thanks for the follow. Bear Bob. Good name. Paul and Roman. I'm squeezing lemonade on Euro Swiss and CAD Swiss. You will be. Yeah. There's a nasty squeezes at the minute. Euro Swiss is pulling off the 5 minute off of 225. CAD Swiss is just starting to as well. So they are starting to, here you go. Look, they are starting potentially that W pattern here. Break of that high, you've got a new structure in place. Forget that. I mean, that really is your move. That's the market open. So yeah, I mean, these two propulsion gaps. So that's your market open. Look, that's the speculative start. That is the pre-market start. So on the DAX, and you'll find the same will be sitting on the US indices as well. Thanks for the follow, Marthinus. Some really good names in here. I like when all the follows come on. Seeing everybody's name. So yeah, NASDAQ obviously is starting to do the same thing. S&P will be starting to do the same thing. Dow is usually a little different. It is very similar today though. The reason you get a difference on the Dow is because obviously when you have a sector purchase, there's less stocks in the Dow. So therefore you get less impact from a sector purchase because there's usually only one, maybe two stocks affected. Whereas in the NASDAQ, you'll have like 5 or 10. But yeah, they're certainly getting out of everything in stocks at the minute. So just be very, very careful trying to meme about this. Yeah. Need to get some kind of catching a falling knife meme. There's some more news coming in. Traders no longer fully price in a 25 basis point hike. The US is going to struggle today as well. 54% chance of the Fed holding rates on March 22nd and 46% chance of a 25 basis point rate after the SVB collapse, according to the market pricing FedWatch. Okay, so FedWatch is saying it, then it's got a little bit more credit. So, you know, when you got these, we need to see where this is coming from, where these rumors are coming from. And the Bank of England rumors, where are these rumors coming from? FedWatch are publishing the fact that they think there's a 25 basis point hike, basically. So 0 to 25. So we're going back to basically the original maximum the Fed announced when we started rising rates. The original maximum they forecast was 5. So all we're doing is we're going back to the original forecast, in theory, aren't we? And then potentially holding this level for the year, which is what the Fed have said. We will hold terminal rate for the rest of the year and monitor what happens with CPI. And as long as CPI comes down and as long as that stabilizes or comes down, we're looking at a 2% target. We're on our way there. Then we will start to drop interest rates along with inflation. So just back to where we said we were going in the beginning. Big Papa, I am thirsty. I've got some water. Got some of mine. I'm getting thirsty as well. SS, which app we can start Forex trading? It's not an app, it's a broker. You don't trade on an app, don't trade on a phone. You trade on a PC. Just pick a broker. If you're new to trading, go and pick any broker. On my website, there's links. There you go. I'll send you a link. There's links on here to my broker, which is Robo Forex. But it depends where you are in the world, basically. So just go and do some due diligence. But use a big broker established. Anybody established over 10 years that's big, you should be all right with. Unless it's 8 cap, don't use them. When you take positional trades, do you use the same volume per entry? And what is the maximum amount of trades you can take? You can trade per trade idea. There is no maximum. There's 2 ways. Again, it's all covered in the bootcamp. Rishab, have you watched the bootcamp? I say probably not, because this is all covered in the bootcamp. I'm not going to go through it all now because it's a long one. But bootcamp. There is no maximum number of trades. You get in and you scale in and you wait for the market to go your way. And then you do drawdown control along the way as you see fit and as you need to. There's no maximum. If they want to squeeze you, they will squeeze you. Look at the CAD Swiss. They're all proper squeezing everybody at the moment on the CAD Swiss. But as long as you're scaling in with the right distances, you will just be in drawdown. If you're scaling in close together, you will get hurt. Yaman, sorry. Trailing stop, make, lose a lot of profit. B. Hang on. Let me just get my glasses on. Trailing stop, make, lose a lot of profit. B2, what about fear of losing? How to deal with it? How to deal with fear of missing out? Have you watched the bootcamp? So if you go to the bootcamp, there is a slide in day 1. Oh, shush. There you go. So that slide there, I don't know if you can see it. Let's take it to YouTube, you can see it then. Ah. Yeah. Jesus, that's very low quality. It's because I'm streaming. So for the position trading, yeah, helps you eliminate all of this. Fear of missing out, system hopping, trying to pick tops and bottoms, trying to pick the pullback points and trends, getting stopped out, not being able to hold a winning trade. Everything here is solved by position trading. Yeah. So it gets rid of pretty much all of that. Yeah. The reason for this, yeah, is because you can't do that. Yeah. Every problem every trader has in trading is caused because they are trying to time the market. Yeah. So when you get in, you're trying at the moment right now, 90% of traders are trying to pick the bottom on the DAX. They're trying to time the entry because they're scared of missing that. Yeah. That's what's happening right now in the market. There's a lot of traders doing that now. Yeah. So they're scared of missing that pullback. They're scared. They're trying to get the bottom, yeah, of that move. They're trying to get a sniper entry. Yeah. And then when they get in, they're going to try and hold on to that trade for as long as they possibly can. Yeah. If you don't use a stop and you try to position trade this rather than trying to get in and time the entry, you will get a profit out of it. Because if this is not the turning point will be later in the New York session. So you get in the New York session, then you get out in the New York session. Yeah. So there is no fear of missing out if you position trade because there's no fear. Because if you're not worried about getting this wrong, because all you do is you scale into the position later. Yeah. So it gets rid of it. But it's all covered in the bootcamp. It's too much to go into now. The FUD, Brian, the FUD train is running full steam over here. The FUD train. Do you mean the Fed? Lee, does the big move on the DAX start at 8 a.m. or 9? 8 a.m. Frankfurt. There. Great filibuster. I'm short Aussie US, seeing nice price action. I'd be very careful on this, but yeah, I mean, it's good at the moment. You've had a reversal alert this morning on that, which is coming down very nicely. But if we get weakness on the US dollar, depending on what the Fed says, this thing's going to fly. So you've just run into propulsion, which is getting bought up. So the buyers are re-entering the market here. They'll be coming to look to test that area. But we've got a gap fill to do. So again, this is a really good example of a trading stop, right? So you're short on this right now, probably from up here somewhere, which is great. You're coming down. You've seen a tweezer top go in there. We're sitting in a propulsion gap, which is likely to add buying. Yeah, so that is where you'd put your trading stop. If they do that and then target this area down here for the gap fill, all you're doing is you're missing that. This is why trading stops don't work. FUD is fear, uncertainty, doubt. Is it? I've never heard that term. SVB FUD. Fear, uncertainty, doubt. Yeah, that would make sense. Yeah. It's all this is the market completely overreacting. It might not be completely overreacting. We may be on the start of a new financial crisis. Yeah. When this all happened in 2008, someone had to go first. However, the person that went first, actually, that's not a lie. The person that went first was massively over-leveraged on the housing market. SVB were massively over-leveraged on the housing market. But the rest of the banking sector have learned from their mistakes, you'd think, wouldn't you? I don't know. It could be the start of a collapse, couldn't it? Yeah, it's not difficult, is it? What do you do now? Just hit the sell button constantly on everything. You make money, which is great. Just don't buy anything. But obviously there is the old buy the rumor, sell the news. We are rumored that the Fed is not going to increase their rates. When the Fed says they are not going to increase their rates, you sell it. We don't know yet, do we? We haven't had the news. Tomorrow's going to be the key. Tomorrow's the key. Happy I found your channel, Bear Bob. Good name. I like that, Bear Bob. Martinus, South Africa name, yeah. Goncalo has just subscribed as well. Goncalo. I don't know if I'm saying anything right. I'm really bad with names. You'll learn that if you hang around here for a while. How often are you live? Twice a day. So 7:50 in the morning UK time and 1:20 now in the afternoons UK time for the New York session. So basically 10 minutes before the open in Frankfurt, 10 minutes before the open in New York. Just halfway through the PDF. Great content. What, my PDF? Don't go through the PDF. Don't do that. You mean that one? Don't do that. Do this. This is just slides. You will find every slide I waffle for hours on. So don't just do this. You're going to miss so much if you just read the PDF. We're just starting to short the DAX again. Hey, look, I'm long the euros. I'm long against the euro. I am using a big stop though. Yeah, so there's my stop. Very low risk, very low risk. That's on the reversal alert. So I've just taken that on the reversal alert we've just had on M5. Oh, hang on. I haven't had it here. So on my other broker. Oh, no, this is a stupid platform. Will not update today. But I am long on a reversal alert when the data loads in. Why don't I install AdBlock? Because I actually quite like watching the ads. I'm very different from most people, yeah, with ads. I like watching ads because I like people selling stuff to me, yeah? How are you ever going to buy anything that you're interested in if nobody's going to be able to sell to you? There is two sides to every advert. So there's nothing wrong with people selling to me, especially when it's people like Greg Secker. Okay, so there's my entry on the yen. That reversal of that 150 ADR. Tweezer bottoms. Not going for much. I've got a big wide stop on it. So I've got no trouble with this account is because it's a fivers. I've got no leverage. So I'm getting in with very small lot sizing, as you can see on this, because I just haven't got any leverage on it. They only give you tiny little leverage. So I can't get full size positions on. Not that I want to. If we get a surprise like spike in CPI, the Fed might even go with 50. No, they won't go with 50, I don't think. That's too aggressive. They'll go with 0.25 if we get a spike in CPI. And it really depends what the CPI spike is. So that's PPI. So yeah, I mean, you've got to think what the spike's going to be. We're getting on top of it, look. So since October was the last time we had a CPI spike. Since then, we've had better than expected figures or as expected figures. So the chances of getting something like that, a big spike is not high, I don't think. Yeah. We increased interest rates last time by 0.25%. That should have had a negative impact on inflation. We know it's had, and we know it's likely to have a negative impact on inflation because it's had a positive impact on unemployment. If this is going up, that will tend to go down. Yeah. And that's because of this. This is why the whole market is all about interest rates at the moment and controlling these levels. GDP went down. It's all pointing to the fact that we should have an as expected CPI, but we were expecting 2 releases ago not to get lower unemployment figures, and we got them. So, you cannot predict news. It will do what it's doing. Federal Reserve will not make any hikes this meeting. Maybe not. Is this the trading in the zone concept? No, trading in the zone is Mark Douglas. That's a psychology book. Very, very good book. Go and if you haven't read Trading in the Zone by Mark Douglas, one of the best books you'll read on trading. It's not about trading, it's about why you are screwing yourself up. Very, very, very good book. Tits, I call it. Trading in the Zone. I didn't just swear then. Well, it's not a swear word anyway, but it is. It's Trading in the Zone. Tits by Mark Douglas. Very, very good. Are you guys sure the Fed will not hike interest rates because my crystal ball told me they won't stop? Absolutely, Big Papa. Everybody's got a crystal ball. Everybody's got an opinion. Everybody's averse to everybody else. That's why the market works. If we haven't got people wanting to buy, the sellers won't be able to move, will they? If we haven't got people wanting to sell, the buyers won't be able to move. If we don't have two people wanting to do the opposite thing, we don't have a market. Which is what makes me laugh when people like that guy last Thursday, that guy came in and said, oh, it's going to this level, definitely, 100% sure. It's going to hit this and then it's going to bounce. It's like, well, what planet are you on that tells you exactly where that's going and where it's going to bounce? Because give me some of that. I'll buy it because you're obviously a millionaire. Why are you in YouTube watching me? Because you're overconfident and haven't got a clue. And that's why you need to go and get this little PDF which tells you where you are. I can guarantee that bloke last week was sitting on stage 4. Yeah, walking on water. I know it's going there because I've used this pivot system, and for the last 3 trades, it's done exactly what it should have done. Well done, you're walking on water. So what are you now? 5% in on the next one? Blow through the level. Stop out. Oh, I've lost everything, and twice as much because I was walking on water because I found the Holy Grail. Rinse, repeat, system hop. Could you do gold? I've covered gold already, Chris, but gold is basically down to CPI tomorrow. So at the moment, it's a sell based on the current market conditions. However, well, I say that it's a sell. It was a sell on Friday, and then obviously SVB happened. So I would still want to be shorting this, but if the CPI figures come out as negative tomorrow, we will probably see a drop in the US potentially, because it'll be an indication of freezing interest rates. And if that happens, we'll see weakness in the US, which means gold will pop. We've got the FOMC gap to fill. We're just filling at the moment the unemployment rate gap. So, but we have also got obviously this new gap caused by the move, and that's one here. So where we are at the minute, if you look at it, we are banging between 2 areas that we're heading to. And again, this is why I keep saying over and over again, there's only 2 certainties. It's going up or it's going down, and it's going to move through time. If you're trying to time your entry into that, you're going to struggle because there's a 50-50 shot every time you press the button. So I don't know which way it's going. Especially today, you know, who the hell can forecast where anything's going today? Yeah, we had ADRs at 150 before we even opened London. This thing's the market is scared to death at the minute. Anything can go anyway, and it only takes one bank to start a massive move, and we will just collapse even further. New York this afternoon. If we go into an accumulation here, ahead of New York, yeah, we've done the gap fill, right? So if we go into an accumulation ahead of New York, there's every chance that we are going to get that. However, we've done our average daily range. Look, there's ADR. We've done our average daily range already before New York even opens. So that's very rare. So how can you predict anything at the minute? Very, very difficult. Today is a very much, I've got strategies running today, which will get me in, but I'm going to be very on top of this at the moment today, and I'll be watching to see what happens. But today I'm mostly going to be watching. I was expecting today to be really quiet because it's a no news day. We got no news today. Look. If we hadn't have had SVB go pop on Friday, then Thursday, but Friday, whenever it actually happens, we wouldn't have all this movement today, would we? Tricky. SVB CMO worked for Lehman Brothers. Yeah. Get your box, boys. Load up your stuff. Off you go. Yeah, I don't know. I really don't know what's going on with it at the moment. Fivers, what convinced you to go for them? So basically, Fivers I've not hated. Fivers I've not traded with before. I can't type the Fivers. But they've got a new Bootcamp out program, which is a really low cost program. And basically it's a triple evaluation, which is fine, but it's $95, yeah, for 100K. So you can't really turn that down. So I'm having a go at this because the profit targets are really low as well. And they've got a maximum loss and no daily loss, which is really nice. It's a really, really, really nice way of trading. The trouble is that, yeah, as you can see, I'm struggling to get positions on. I can't get trades on because I'm not the sort of person that sits there and goes 1% on an individual instrument. I get into multiple instruments, and 1 to 10 leverage is very difficult to trade with. So that's the big downside for me on it. But the big upside is the way they scale you in to 100K is lovely. You've got a maximum loss fixed. So you don't have to worry about dailies. It's literally, I can lose 1250 on my way to 1500, and the targets are actually pretty low. And it's cheap as chips. And you can have up to 3 of them. You can have 1 of those and 2 of those. So you can basically get pretty much nigh on $500,000 funding, but it's not going to be quick. But it can be quick. There's no time limit, so you can pass this one. You can pass all 3 of these in one day if you want to. I think they will have a very stern look at your P&L. You can, but payout ratio on the first payout is 50%, and then it's 75% thereon. But your target's only 5% to get scaled, and you can withdraw this halfway through, and it doesn't affect your scaling. So it's a pretty good plan now. I think they've always had they've been around for 5 years now, 2008. So 2018 rather. So they've always been very out there, but they were one of the first prop firms. But their offering, because they've actually funded you, their offering is actually always been pretty poor. Whereas people like My Forex Funds and E8 and FTMO and that, they've come along with different offerings in a different way. But I thought I'd give it a crack. But the other thing I hate about them is I'm forced to use MT crap, MT5, and I hate MT5. I launched it this morning, and the first thing it did was auto-update itself. And I'm like, I don't want to auto-update. I had a stable version. I've got no idea whether you're going to work today. When you've got a trading platform, you're dealing with $100,000 worth of risk, yeah? And you've got a trading platform that updates itself and integrates bugs into it. And it does. It gets buggy. And then all of a sudden you go, this isn't working. You report a bug, and then 3 days later they fix it. It's like, come on, I'm trying to trade a half a million portfolio on this, and I can't, the buttons stop working because they've introduced, it just doesn't, it's awful. MT4 is much better in my personal opinion, which is why 95% of people still use it. But they force you to use it, unfortunately, so you don't have a choice. It's a pretty good plan. But it's my first time trying them. I use My Forex Funds on E8 all the time, and I've never had a need, but I like it. It's a little bit of a challenge. It's like 3 stages. I'm up for that. It's a bit of a you're challenging me. We'll see. I am short Euro US dollar right now, Philip. Cool. Well, it's pushing up at the minute, but useless charts. Okay, yes, cool. Looks good. What's that pinging? Oh, somebody contacted me on MQL5. It's probably somebody raging at me because it doesn't do something, or spamming me. Hardcore Henry. That's a good film. Chris, how is a lot size calculated if you have some pairs have 2 decimal points, some have 5, and then 3 as well? What's the technique? Use a lot size calculator. Or if you've got MT4, because that's what I use, you can use an indicator to do that. There's an indicator called Money Manager Graphic Tool. You put it on your chart, you hit the sell button, S, and it comes up with this box. You adjust the lines and it will auto calculate your lot size for you. Money Manager graphic tool. It's in the Telegram channel, in the file section in the Telegram channel, or you can just Google for it. Money Manager graphic tool. That will auto calculate lot size for you. Don't try and do it by hand. Either use an EA Price Action Toolkit. Yeah, this is one of my EA's Price Action Toolkit. If I want to risk 0.5% short on a pip, probably 6,300. What's that? 287. Yeah. So if I want to go short with a certain pip amount, I just hit that button and it automatically calculates all the lot sizing for me, so I don't have to worry about it. Astro, you're off. Good night. Well, that's pretty much all I've got for you today. As I say, this market is selling off hard at the minute, so just be careful with everything you do today and get into. I'm going to look at seriously banking stuff fairly quick today, just to keep the risks down. But yeah, if you go in the if you're anybody of you guys in Telegram, just I'll put the Telegram link in there. It's in the description of the video anyway. But if you go to Telegram, there's a file section and there's loads of stuff in the file section. But yeah, just be careful today. I'll be back at 120 for the New York Open, but I may not trade the New York Open this afternoon. I want to see what. I'd be very careful if you're using the opening range breakout this afternoon, EA. I'd be very careful with the afternoon session. Yeah, if you look at the Nasdaq, where we are, we've done the gap fills, which is what they've aimed for. So they're quite possible that we're going to get a move back up. Where if that move back up's already done, all we're doing is we're basically returning to origin. So the afternoon session could well just be a normal session. However, they've put in all their money. So it may be that we just get a whippy sort of rotation day today, which is what I was expecting off the news. So I'd be very careful today with anything you take, because until we get some announcements as to where all this information is coming from that's moving the market everywhere. This isn't all SVB related. There's other stuff coming out about interest rates and stuff. None of the Fed, ECB, Lagarde or Bank of England have said anything yet about anything. So this is all speculation, but speculation moves the market. However, what we often find when we get speculation is a V-shaped recovery, because you'll get this completely undone because all it is a rumor and it's not actually going to happen. So just be careful. Mean reverting all of this. Yeah, I mean, you look at Euro Swiss, for example. Yeah, just, yes, this looks like a lovely long, and yes, we know exactly where it's going. But equally, if this is some kind of collapse underway, you do not want to be getting into a position necessarily today. But stop loss trades, fine. Use a stop. But be prepared to get chopped. Yeah, I got done on Thursday. Yeah, we had massive moves. We had 200 ADR moves on Thursday. Using a stop loss, you are going to get caught trying to catch the lows, which is why we don't use stops most of the time. But anyway, how's the sentiment going? Let's have a look. Nothing banked yet. Nothing else banked yet, but 2.3 DD. Look at all this green. Lots of green. Euro yen buy might start to play out now as well on the sentiment. Really mixed on the yen. Look, we got sells, we got buys, sells, buys, buys. It's really, really mixed sentiment on the yens. It's very, very difficult to trade the yen at the minute. Markets all over the place, but all starting to V-shape recovery. Look, it's like where you know, with ADR, where do you start your mean reversion? You've got to start when you see price action. We've got price action. That first candle there was your entry with your stop. Right. Dow Jones is a buy. Is it? Who told you that? Jesus, this is your first day in here and you are predicting the market. You will learn very, very quickly if you stay in here. You are not able to do that. Nobody is. Otherwise, you wouldn't be in here if you could predict the market. If Dow Jones is a buy and you're buying it and you know how to do all of this, why are you here? What's your recommendation scaling and distance? Half an ADR, Stevie. Again, it's all covered in the bootcamp. Half an ADR to an ADR. However, at the moment, half an ADR is tough if you're in any of these Swissies, which is why scaling is important. The distance is important. Normally, half an ADR is fine. When we get these ADRs getting up, like pound New Zealand is my main measurement. So when we start getting up in the 200 to 250 area, then I start looking maybe for a little bit further apart. Sorry, bear with me 1 second. I've just got to grab a delivery. 1 sec. So I'm home alone today. Yeah, so when we start getting the ADRs up, that's quite often where you start looking for slightly wider positioning when you're scaling into positions. But obviously you don't know ADRs are going up until these moves start. And these moves are what starts those ADRs. But that's a beautiful reaction there. Look, just done the liquidity run there, taking everybody out. So yeah. This could be the weakening. This could be the reversal starting on all of this stuff. So Euro Swiss, look at that. Straight off for 225. So anything you take, any of these mean reversions you're taking today, yeah, the targets are really obvious. Yeah, you just look at where the break was. The break was Asia. So it's the Asian low. All of these, if that's going to happen, that's what's going to happen. Or that. Either way, so the V-shaped recovery is the liquidity run there. The market structure continuation is the bounce of resistance. One of those two things is going to happen. Your mission, should you choose to accept it, is to decide which. I got the tool from your Telegram. Cool. Excellent. Mumo, quick one for the fivers. How did you get around a stop loss is required on all positions and orders? I'm using a stop loss. Mumo. Every trade I have is a stop loss. Yeah. I'm using a stop. I have no choice. This is another reason I don't like the fivers. But it's not actually, because all my prop accounts, I don't position trade prop. I do, but I don't position trade it in the same way. All of my, if I'm going to position trade a prop account, I will not take more than 2 or 3 positions on it, and I'll stop out. So you got to use a stop, which is no problem. You can't position trade. You cannot position trade this. This is a scalping or a swing account. Yeah, you can't position trade on 1 to 10 leverage. You need 1 to 100, 200, 500. You can't do it with 1 to 10. You just haven't got leverage. You'll never get into anything. You'll get into something and it will squeeze you, and then you'll go, I want to get into something else, and you won't have any margin. You won't be able to do it. So you have to, it's just a stop loss. A can of beer and just go for it. I don't know what that was I was talking about then, but yeah. Chug a can and hit the button, basically. That's what trading's all about. I look at trading as a mind game and probability of risk management. That's exactly it. It is risk management. It's all about risk management. You have no control. Wrong one. Wrong link. You are not in control. Go and watch that video. It's really good. It's really old and really crap. You know, when you look back at people on YouTube, and I'm not a YouTuber, obviously, I do stream on YouTube, but I'm not making money out of YouTube. But you look back at the YouTubers, the big guys, you know, the famous ones, and you look back at their very first videos and the production quality on their first videos. Look at my thumbnails on my videos, my original ones, when I was just like figuring out how the hell all this works. The sound quality is terrible. Echo. Super echo. Awful. Oh, I hate watching them. Tim, I'm in 4 positions long on CAD yen. I will go in a minute. Four positions long on CAD yen, still relatively comfortable. Don't want to see it plummet. Also in 2 longs on New Zealand Swiss. This is starting to recover, having double bottomed. Yeah, so CAD yen, right? So if you're in 4 positions on this, I don't know where you've got him, but so I got into an ADR reversal here, look. And out there, quarter of an ADR. And I've got a short in there. But if you're in this with 4 positions long and you're still comfortable, that's fine. If you're getting slightly uncomfortable or you want to do something about it, this is where you would do aggressive drawdown control. Again, we've got a video that I posted last week about this on the YouTube channel in here. That one on the aggressive drawdown control. So here at a double bottom is a really good spot for getting in aggressive. You're not going to get a reversal alert on this, I don't think, because of the speed of the movement. So you'd need to, you know, you've had one already. Look. So this is a really nice tight contraction. You got W pattern there. Reversal alert. And there's our retest. Yeah. So if you want to get in aggressive on this, either that was your entry there on that candle, or you can go pending a border above that candle and a stop somewhere down here and put an aggressive move on. So whatever your lot sizing, let's say you're one lot long, go in with a 0.5 long here, and that will bring your average really down fast and hard. And then I would say, you know, you want to watch what happens when we get up to here, but you could use all of that profit to remove one of those, probably. Mumo, market reversal alerts EA for the 5% is viable. Yeah, that's exactly what I'm using. Yeah, market reversal alerts EA. This is taking all these trades for me. Yeah. With a stop loss though, yeah? So, you know, market reversal alerts EA gets me on reversals. Yeah, so it's got me in there because there's a reversal alert there. Indicators. Yeah. Yeah, so there's the break-in structure, market reversal alert. There's my entry. Taken with that. And you see, look, no target. I don't use targets. I'll get out when I get out. When it looks like it's good to get out, I will get out. But I'm not using a target because if you know these are the days, these are the reasons, these days, yeah, are the reasons you don't use take profits. Most of the time. Some of my strategies I do, like that gap fill this morning, that was literally just a gap fill strategy. But on a normal trade, if you don't use a stop loss, if you don't use a take profit, if you got in this morning on that reversal alert, so there was a reversal alert on that candle there that broke that low. So if you took that this morning, right, and you basically got there and there, and then it got to there, right? If you weren't using a TP anywhere, look at that, boom. You hit that level at ADR and you're like, I had no reason to get out of that trade whatsoever. If you had taken that reversal there with a stop above there and you'd gone for a 1.5R return, you'd have got out there and you'd have missed all of that. You don't know where the market's going. The market goes where the market wants to go, and it will go until it stops. And when it stops, it will go, haha, didn't really stop, and it will go further. And it will do it regularly. This is what these levels on the ADR are there for. These show you the probabilities of passing those levels. 12% of the time we get past 150 ADR, which means that 88% of the time we don't. But we do 12% of the time. Today is one of those days where we've gone beyond the 2%. The 225, yeah, we don't go beyond the 225 very often, 2% of the time. This is one of those days on the indices today, or on the DAX anyway. Yeah, if you use a take profit with a risk reward, all you're doing is you're limiting your upside. You're capping your downside, brilliant. But if you use a TP, you are limiting your upside. Your upside could be 3 times bigger if you don't use a TP. So I get into the market and I look at areas I'm thinking I don't want to get. If it goes below an ADR or half an ADR, so that's what, 105. So that's 1 ADR. So if it goes 1 ADR against me, I don't want to be in this anymore because it's wrong. However, I've no idea where it's going. This could move 3 ADR upside at the moment. I've no idea. Euro, we've got news on Thursday. So this thing could now push up, sit up there and stay up there for 3 days until it goes 2 ADR parabolic on Thursday. Why would I put a TP? I'll put a stop. I'll protect it before the ECB announcement. But there's no point in limiting your upside. You know, it's like opening a business and having a sign on the door. Yeah, so you open up a shop, a huge furniture shop, right? You open it up, you employ 15 staff, they all stand in there, and you put a sign on the door saying 10 customers at once. Why would you do that? If there's 50 people outside that want to come in, let them in. If this thing wants to go 200 ADR today, let it go. Don't say, no further than that. If it's going to go, it's going to go. Just let it go. And the biggest trades I've ever had are the ones I haven't had a TP on. They just run. They go. They're off. You're making money. I got the Money Manager graphic tool already. Do you have the name of the tool to place a buy-sell trade that sets the stop loss and TP or trails the stop automatically? Do you mean the Price Action Toolkit? That's on the website. Is that what you mean? How do you determine the exact stop loss for the 5S challenge? I don't. Every trade is done on a different way. So these are positions I'm taking based on bias. Yeah. So literally all I'm doing is I'm looking for opportunities to buy and sell based on what I'm expecting the bias to be. The stop loss placement will vary. But at the moment, the EA is set to use 1 ADR. But these are kind of bread and butter entries. These ones, they're not going to make a fortune. Most of my money is going to be made out of the indices. And if I see a really good opportunity, you know, if I see something looks really, really good, I will basically, and it's always the same. I'm a retail trader. Yeah, don't forget, I am a retail trader. So if I was taking that short this morning on the Swiss yen, yeah, I'd have got in there and stop loss goes there. And I'll get out when I fancy it. So there's a gap fill to do. So I'll stay in it until the gap fill's done, and then I'll probably get out the gap fill. But that's what I did on the DAX this morning, didn't I? And it went 3 ADR further than I got out. Nothing, you know. It's all about risk. You've got to cap your risk, but don't cap your upside. But my stop loss is placed wherever it's logical to place a stop loss. So at the moment, it's 855 points, 85 pips, which is 1 ADR. So these positions are 1 ADR apart. There's the second entry this morning. Look, first entry. And I'm saying you can have 1 ADR. If you go 1 ADR against me, get me out. Second entry on that reversal alert. Pop. Both in profit. But the stops are 1 ADR. You can use half an ADR. It doesn't matter, does it? Yeah. At the end of the day, it doesn't matter. I'm looking for longs on US dollar CAD because the bias and the sentiment and everything is saying I need to be longing it. I have no idea whether it's going to move a quarter of an ADR, half an ADR, or 1 ADR against me. No one knows. I can't tell that, can I? So where I put my stop is totally random. If I put it there, I would have got stopped out. If I put it there, I'd have got stopped out. I put it 1 ADR apart and I didn't get stopped out. If you're using half an ADR, you're stopped out. You're in again with a new position and you're still in profit. Yeah, there's no right or wrong with anything. Everybody keeps asking me questions about where do you put this, where do you put that? You put it wherever you fancy it. At the end of the day, there's a 50-50 shot of it working or not, and that depends where you're putting your stop. But the further away you put your stop, the less chance you've got of being stopped out, have you? So rather than taking a loss on that trade this morning, I'm sitting in $44 of profit. Why? Because I'm not stupid and didn't put my stop loss right underneath lows, which is what everybody does. And this is why everybody gets killed. The fear of missing out. Oh my God, I've got to get the best possible timing on my entry. Why? Do you not want to just be right? If you try and time your entry, you're going to be wrong, aren't you? Because the market's not going to let you have it. You can always, as Andy's just said, you can always move a stop loss. Yeah, I can move these all to break even now and make 0 loss. I can't lose. But what I can do is put an order in the market to say, get me out if there's a slight variation. If market structure does that, lose me money. What a stupid thing to do. If market does that, get me out because I'm really wrong. But, you know, the market's going to move. Like, it's purely maths, right? 58% of the time, the market moves 1 ADR up and down. So doesn't it make logical sense that when you enter into a position, if you put a stop 1 ADR apart, your odds are in your favor? We know that it exceeds it 58% of the time. 42% of the time, it stays within an ADR. Sorry, 42% of the time, it moves beyond there. So 58% of the time, it stays within an ADR. So if you put your stop with an ADR apart, you've increased your odds of that trade working to 58%. I've got an edge. Ta-da! Make money. Yeah, when I walk into a casino and it's red or black, I've got a 50-50 chance. If I walked into a casino and there was a chance of being red, black, or green, bang, there's a difference in odds. My difference in odds is I've got 58% of chance of my trades working if I position my stop 1 ADR away. It's just logic. It's just maths. But I'm not going to be able to get in with a big trade, am I? I'm not going to make an absolute fortune on it. It's got to move a fair distance for me to make money. But if I can make 0.25% by not getting stopped out 4 times a day, that's 1% a day. That's, let me do the maths, 20% a month. $20 a month on a 100K account, 20K a month. 20K a month pays my mortgage. I live in a mansion. I don't. I'm not Greg Secker. I haven't got a plane. I haven't got a boat. I haven't got a Rolls Royce. I haven't got a mansion. I haven't got a wall full of watches because I don't sell courses. Sorry, I keep going on about Greg Secker. Poor old Greg Secker. I'm sure it's very, very good, his course. Big Papa, any pairs reaching 225? Yes, loads. Oh, no, only one running. Sorry, Euro Swiss is the only one that's done 225. Is this Mark Douglas concept as well? There's a lot in Mark Douglas's book. Mark Douglas, his book is very much about understanding the market, understanding probabilities and things. You know, is these moving averages here? When they're green, you buy it and you keep buying it until it turns red. When it turns red, you start to sell it. And he's very much like that. Keep it simple. Same as My God, he's gone out of my brain. Oh, God. Brain fart. Larry Williams. Yeah. So same as Larry Williams. Very, very simple strategies. When this gets down here, you buy it. Yeah. When it goes up, you get out. Very, very simple. Everybody that's got all these really complicated systems and strategies are overcomplicating something very simple. The market is going to go up when there is fundamentals and market participants that want to move it in that direction. How far it's going to go is out of your control. When it's going to pull back is out of your control. And whether or not when it starts to move up is right and it's going to come down or not is out of your control. But you need an entry mechanism. The simplest entry mechanisms are the ones that work the best. When the RSI is extended to the downside, buy it. When the RSI is extended to the upside, sell it. If you are in a buy already, exit. It's really, really simple. Mark Douglas is very much along these lines. When you work in a pit, that's why I use tick strike. Yeah, so you can hear the pit. When you're working in a pit, literally, when there is a huge volume of people buying, all you do is you buy. When you hear the buying calm down, you stop buying. And all of these guys that write these books like Larry Williams and Mark Douglas and that, they're all pit traders and they all know how this works. Yeah. The market moves on momentum of buyers and sellers. It will stop when the big guys go, I don't want to do this anymore, I'm going to go the other way. And then everybody smaller than the big guys does the same thing. This is why you get in line with the 24 and the 72, because these are the monthly and quarterly moves the market's making. When the market decides it doesn't want to do those moves anymore, you start going the other way with the market. Mark Douglas is very much along those lines. Read his book. You can't really explain. Mark Douglas's book doesn't teach you to trade. There's no strategy in there. Very little. It's all about how to trade and how to manage your risks and that sort of things. Yeah. When you press the buy and the sell button, there's two options. One is going up, one is going down. You've got no control over that. And this is what I teach in the bootcamp. Stop trying to control it. Why bother trying to get that sniper entry? Yeah. It's what, like these things like, I know ICT's got kill zones. The kill zone, this is where you get into your trades. Why? Why get into a trade there when the market decides to move it here? Do you want me to miss all of this? Yeah. The DAX started moving way before the kill zone this morning. Unlucky, you missed it. I didn't. I got in because the market was moving. And there was a reason. Yeah, because, I have no idea which way it's going. When you press the button, you don't know where it's going. It's going up when it's going down. There's the only two constants in trading. Up, down, move through time. Use them. BTC View, I don't trade Bitcoin. I don't know. It's index linked. So whatever the indices are doing, do the same. Yeah, so this is now an index. Pretty much. It had a bit more of a flurry on Friday and into today than the indices did. But at the end of the day, if you scroll out and look at Bitcoin now, and then look at the US 500, look at the NASDAQ, look at the Dow, look at Bitcoin, you might as well be looking at an index. They're all doing the same thing. DAX is a bit different because it's a different zone, but I don't know where it's going. I don't trade it. Can anyone move stock? Can always move stock loss, yeah, as I said. I don't understand when go to buy from support and then go up price and then go down to retest to support and then go up. That make you angry. You've been in it for a while, World King. Have you watched the bootcamp? I'm being advertised to by Maserati. Hello. I had a Maserati and got rid of it. Awful. If you're getting angry, you have a problem with psychology, right? So if you've watched the boot camp and you're getting angry still, that's because you're using stop losses, isn't it? Jesus, Dow Jones is a buy. Dow Jones is a buy. Dow Jones is a buy. Why is it a buy? Why? What's the reason, Jesus? Give me your analysis. What is the reason it's a buy? Chilo, I like this channel. Good. Give me a thumbs up and subscribe. Welcome aboard, Stephen. I didn't see you. That's 27 minutes ago. Sorry. Missed that one because I was waffling. Mumo, I do declare I will also try the fivers and copy exactly what you're doing. I wouldn't do that. You're not going to do that because I'm not going to tell you what I'm doing. I'm not a signal service. However, all I'm doing is buying in line with the sentiment on the website and using wide stops and scalping. Yeah, this $515 this morning was from the DAX. I captured 1/3 of the DAX move this morning. I missed that. Greg has wild swimming if you trade his system. Still want to know what that is? No, I'm not going to Google that. I'm not going to bite. It's the way. It's a way in his adverts. He says, I start my morning with a run and swimming or whatever. And then he sits down to the markets for 15 minutes and makes $25 billion and then goes off. So, but I thought your job is standing up in front of people, teaching them to trade. But anyway, I don't know. It's all a mystery. President Biden will talk Federal Reserve considering not making any hikes in the next meeting. CPI is lower, rumors are strong. Yeah, but what Jesus, you're not telling us why. When do you buy? When do you buy the Dow? Where's your stop loss? Yeah, you're not telling us. You're saying it's a buy. You're saying everything's a buy, right? But why? When? How? Where? Now? In an hour? Should I do it tomorrow morning? Where's my TP? Where's my stop loss? You can't just shout Dow Jones is a buy. Yeah? Dow Jones is only a buy if you can make money out of the trade that you're going to get into now. Right now, I can guarantee you it's going up or down, but I don't know. You're not giving any details, are you? There's no point in coming in here shouting Dow Jones is a buy. US dollar CAD's a sell. Pound US dollars a sell. Gold is a buy. New Zealand Swiss is a sideways. I'm making it all up because the odds are 50-50. President Biden has nothing to do with the market. Yeah, when he talks, he will not decide whether or not the market goes up and down. The Fed will. And the Fed will not make any decision on rates until the CPI figures are out tomorrow. The CPI figures coming out tomorrow are nobody knows what they're going to be. So you hit the buy button right now. That's absolutely fine. But when those negative CPIs come out, don't come crying to me because you blew your account. You're gambling if you're just buying it now because of something that's going to happen tomorrow afternoon. It's just a gamble, isn't it? You're trying to see into the future. You're using a crystal ball. You can't predict the future. Biden sometimes doesn't even know what he's talking about. No, Biden's standing up there on so many drugs because he's so old. He's reading off of a list in front of him, and he says the wrong word, i.e. buy instead of sell, and the market will just go wrong. Don't listen to talking heads. How many times have we seen this? How many times have we seen this move today? Yeah. It happens all the time. This afternoon we'll be here and everyone will be going, what the hell was that all about? Happens almost on a weekly basis. Collapse recovery. It's what we call a V-shaped recovery. There's even a terminology in the market for it, a V-shaped recovery. It happens a lot. and an A-shaped recovery. Happens a lot. We're in the middle of an A-shaped recovery at the moment on the previous week's move out of support. I don't know. I've no idea which way it's going. I get on board and I hold on tight. Biden sometimes, yeah, I've said that. Good morning. Did you buy the crypto dip? Oh, God. No. What's your opinion about correlation between the euro and the DAX? So when the euro goes up, the DAX goes down normally. However, this morning, obviously, that's different. So the euro basically will tend to move in the opposite direction when there's large stock purchases going on, because money gets taken out of the euro to make the stock purchase. Same vice versa with the US markets. When the US dollar goes up, the stock market comes down. So there's a correlation. There's an opposite correlation. We've got divergence this morning. So the euro has been coming down and the DAX has been coming down. So quite what you make of that, I don't know. But it's not normal. But yeah, I don't know. Difficult. As I say, today is just a really, really difficult day. It's very, very hard to predict what's going to happen today. It could go either way, but the market is very exhausted. Yeah, I mean, you can see we've had such a long bull run on the euro. Lagarde's coming out on Thursday, and she's going to shake the market up. I don't know where it's going to go this week because it all depends what Lagarde says. Very tricky, difficult to know. Chris, I'll have better odds opposing that buy, Jesus. I will scout the opposite way, yeah. No one knows where it's going. Think about it. It's like, you know, people say, this is why I've had so, I'm sure everybody's had so many arguments in Telegram groups and Discord channels with people like arguing about trades. Yeah, and I've had them as well. There's like people opposing what I say is going to happen, and I used to. I don't do it anymore because I don't care. What makes me cross is people try to do it still. It's like if you knew where it was going, right? You wouldn't be sitting in a Telegram group, a YouTube channel, a Discord group, right? You'd be sitting on a yacht somewhere with $1 billion in the bank, because if you could predict the future, you would be a multi-billionaire. You know, so all these people that say, "Oh, well, it's going to come up and it's going to hit that pivot and it's going to go down." I'm saying it's going to come back up to here because this propulsion gap that started this move. I don't know. That's where I would expect it to go, but also I haven't got it on this one because it's an empty crap. But also, you know, look at this one. Let's look at something that's actually moving in the middle, shall we? Yeah. I reckon it's going to do that, possibly that, or that. But it also could do that, or that. I can guarantee you it's going to do that. But I don't know which, because I can't predict the future. But what I can do is, when I get into a trade, if I've gone long and it's moving that way, I can add to that position because it looks like my prediction is coming right. If I'm wrong and it goes down, I know where I need to add to my position. But at no point in this market would I ever want to take a loss. Because historically, every time you get one of these, 95% of the time, they fill. Yeah? Unfilled. 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 Where are we going? I don't know. I do know where we're going. I just don't know when. And this is the whole point of Bootcamp, is you can't time the market. You can't time where it's going to go, when it's going to, you can see where it's going to go. You just can't time when it's going to go there. And that's why everybody just keeps taking stops. So you go long because you think it's coming up to this one. It moves down, you get stopped out. So you go, all right, I'll wait for the next bounce. So you get a bounce, you go long, it moves down, you get stopped out. Then it pushes up and you go, right, I'll wait for the next short because it looks like this is a short now. So you go short, you put your stop there, you get stopped out. And then it comes down to there and you've missed it. It's what we call market structure. But why on earth do you think you could predict which one we're going to get next? Warren Buffett can't do that. If he can't do it, and he's the biggest, most successful investor in history, why on earth do you think we could do it as retail traders? Stop it. Stop trying. Who is your non-FTMO Forex broker of choice? FTMO is not a broker, it's a prop firm. My broker at the moment is Robo Forex. But I also use IC Markets, not IC Markets, Axie, and DarwinX. The market structure, clairvoyance, yeah, rebrand. But this is the thing, right? I could, right now on this pound yen, I could post in Telegram an analysis with lots of squiggly lines and everything on it and going, yeah, the arrows up here and say it's going here, right? And then on the 22nd of September, when it does that gap fill, I will post a, hey, look at that trade, because I was right. And I can have 100% strike rate because I'm 100% sure at some point it will go there. But when it's going there, you know, it's just like, no idea. How would you know that? We have odds in our favor. We can put the mathematics in our favor, like using ADR. But when I have no idea if this is even going to get back up at here today. That's a V-shaped recovery. That's hard work. Like that A-shaped recovery was hard work. They're not the norm, are they? What the norm would be in this case would be that. Which means that's going to become an orphan propulsion gap, which means at some point we're coming back up to there in the future. Next week. End of this week, I don't know. But where are we going first? Probably down here. There's your target. So think, if you start thinking in targets, you stop using stop losses and think of targets rather than trying to get the entry right. You suddenly find that it all becomes clear. China press. Z plans to speak with Ukraine's Zelensky. Ooh, that's interesting. Russia is not going to like that. Its closest ally talking to its enemy. That's not going to end well, is it? Right. I'm going to disappear now. Axie and DarwinX. How do you spell those, please? Well, DarwinX you've spelt correctly. Axie, just take the E off the end. AXI. Don't worry too much about brokers. Download a demo of the broker. If you find you've got a hideous spread, run a mile. If they've got high commissions, run a mile. There's so many brokers out there. But if you use one of the big ones, one that's been established for a long time, DarwinX, Axie, Robo Forex, IC Markets, FXCM, all the big boys. Use the big boys. Yeah, they're all going to spread you out over the swap. They're all going to spread over news. They're all going to widen the spread up points, and they're going to take you out if you use a stop loss. If you're not going to use a stop loss, you won't have a problem with any of them. So choose the cheapest one. It's the only advice I can give on brokers. But Robo are pretty good. They've got a really good spread of accounts. But it depends which country you're in. Yeah, if you're in the US, you can't use them. If you're anywhere else in the world, you can. But this is a London session, so there's not going to be many US people in there, I wouldn't imagine. So. All right, so I'm going to leave it there, guys. I'll be back this afternoon, and we will trade the NASDAQ this afternoon. We'll see how we get on, see where we've gone, basically. But I'm just going to watch all this unfold today. Just be very, very careful with anything you do today, because it's a volatile beast today. So want to watch it. I don't use TradingView. I just use MT4 and 5, yeah. Because brokers don't use TradingView. That's, you know, you're limited to brokers. TradingView is a very US-based thing. Much more futures market. So yeah, so this afternoon, 1:20, not 2:20. Remember, it's 11 o'clock now. It's 2 hours and 10 minutes into the future from here, not 3 hours today. The clocks have changed in the US. Market opens an hour earlier for us in the UK. So 1:20 I'll be on, not 2:20. Remember, if you come at 2:20, you're late. Okay, guys, I'll be back tomorrow morning, 7:50, same time as usual. Anything else you need, let me know. Otherwise, I'll be in the Telegram group. And good luck if you're trading the rest of this morning. I will see you this afternoon.